Yeah, I could see this was not green. Perfect, super. Okay, understood. There, we'll start. हाँ ठीक है. Yep. All right. So I'll come on stage. I'll welcome everyone. We'll start off. And while we do so, I'm also going to say that we'd like to thank our incredible partners in helping us put this event together. We'd like to thank our presenting partner. You want me to announce all the names? Yeah. Presenting partner, Dubai Economy and Tourism. Session partners, Interpolitan Money, Nisus Finance, Bexley Advisors, HDFC Capital. We'd further like to thank our knowledge partner, Omnivore, and experiential partner, Champion Infratech. Check 1, 2, 3. Check 1, 2, 3. 3, 2, 1. Yep. Perfect. And now to set the tone, I'm going to be inviting Anitesh Dharam, Business Head, VCCircle and VCC Edge. Okay. He's here. All right. Perfect. Yep. So the edge, I'll remove it, right? ठीक है. Done. Okay. After this, we now move on to the panel discussion, Unlocking Limited Partner Opportunities. And our speakers, Abhishek Nair, Head New Ventures, Sharjah Asset Management, Ajit Kumar, Managing Partner, Evolvence India Fund, Suresh Vaidyanathan, Board Advisor, Rainmaking, Forward Fooding, and Gara Abdul Khader, Senior Vice President, Crescent Enterprises. Moderator, Malika Malu, Senior Correspondent, VCCircle. Perfect. Next session, Land as a Magnet. Meherveer Chandani, Managing Director, Pamun Group. Sinda Hamdi, CEO, Real Estate, SARC Realtors, Office of Sheikh Ahmed bin Faisal Al Qasimi. Subhakar Rao, Chairman, Champions Group. Manish Agarwal, Associate Principal, Investments and Strategy, HDFC Capital Advisors Limited. Moderator, Swet Sarika, Assistant Editor, VCCircle. Yep. Good to go? Yeah. That's what I want to check. Is it? Nisus, right? Perfect. So Nisus Finance. Done. Okay. For the partners, only Interpolitan, no money.
So Kavya, we'll do with the music also there, right? Music के साथ कर लेते हैं एक बार जो chairs में coordination पूरा हो जाएगा फिर. ठीक है. दोबारा से करें या फिर shall we continue from
next session से करते हैं.
ठीक है ना.
तो अभी जो नेटवर्किंग ब्रेक होगा, राइट? सो वंस द नेटवर्किंग ब्रेक इज डन, उसके बाद से.
ठीक है. Can we have the music please? Yes. Yes. And then क्या हुआ स्लाइड में मुझे बताओगे एक बार?
For example, if you go to this particular Sinda Hamdi, Land as a Magnet, वो वाला पैनल आप निकालिए. अगर
previous one.
हाँ. Take a look. For Sinda Hamdi, वो जो स्पीकर है, उनका जो डेजिग्नेशन है, वहाँ पे HH है ना?
हाँ.
That HH needs to be removed. There's no His Highness.
Okay.
And that's also a point. Sheikh ka S will be capital. The whole thing. Perfect. Yeah. So in this, Sheikh will be S capital, HH निकलेगा. I think दो बार आ रहा है. Even उसमें okay done. ठीक है.
ये स्लाइड चेंज करके दे दो फटाफट मुझे अभिषेक. Should we go after this?
Yeah, after the networking break.
After the networking break, yes.
Fireside chat. So we'll have Sharaf, Fund Head Amplify Growth. Swet Sarika will be spearheading the session. Fireside chat. Yep. ब्रेक के बाद पहले ये है ना
Fireside chat. Yes.
ठीक है. This gets done, then we do seeding venture ecosystems. उसमें I'll read out the speakers. Khalid Talhoni, Managing Partner, Nuva Capital. His Excellency Maher Al-Kabi, Chairperson of Al-Sarkal Group. Arif Mohammad Al-Alawi, Chief Executive Officer, Dubai Cultivate. And Anirudh A. Damani, Director, Artha India Ventures. Aman will be moderating it.
Yes.
ठीक है, बढ़िया. All right. The Capital Silk Road, that's the next session. Kunal Jain, Promoter, SPG Family Office. Anup Nair, COO, Interpolitan Money. Ishan Kaul, Global Investments Head, Sinarmas Technology.
Done, I guess, yes.
Dilasha is moderating it. ठीक है. Now we come to the special address featuring Ambassador Dunstan P, CEO, Office of Sheikh Ahmed bin Faisal Al Qasimi.
One second.
She's just checking the panels right now. Special addresses के बाद. Special address पे जाना.
Office of.
ठीक है. We have after this video also.
ये कब आ रहा है?
इसके बाद ही आ रहा है.
ये इसके बाद तो white paper release है ना?
One second. 110 पे है white paper release.
1 to 110 for 10 minutes. We have
Yeah, that's what. It's after the special address, no? So even if let's say 12:45 to 1 is special address, वो खत्म हो जाता है जैसे the ambassador finishes. Immediately I come back for white paper release launch.
ठीक है.
तो ये वीडियो कब आ रहा है?
तो वीडियो उसके बाद चला देंगे फिर हम. No problem.
Does this video have any bearing with the event?
and we will use in the networking break.
हाँ. So ऐसे कुछ जरूरत नहीं है ना वीडियो की. It's only during breaks. Perfect. So there, what will happen is special address done. I'll come back on stage. Now we come to the white paper release. Okay, white paper release के लिए we'll have Omnivore का leadership.
Yes.
We'll have either Anitesh Smeda, will also be there.
Yes.
दोनों आएंगे, white paper release हो जाएगा. जैसे release हो जाता है, QR code आएगा, people can download. We'll also have tent cards on the table, so
Yes.
you can download. Once that's done, Omnivore leadership से जो आ रहे हैं, he or she will come and speak about the paper.
Yes.
Speech done. I'll also inform the fact that it's again available for download. Then we move on to lunch.
Yes. It's wrapped already. Yes. We have 2 copies. We have wrapped. Yes.
Perfect. So we are good, right? With the white paper.
Yes, we are good to go.
That gets done. Networking lunch. Ab lunch khatam. Lunch ke baad people are back. This is where again I'll thank all the partners. Okay, all of them one by one. Again I'll thank. Then we move on to the next session. Conglomerates. वो वाला जो session है. Speakers are Dr. Ruchi Dana. Yeah, sure.
It was there. We'll run it. We have seen that. अभी था चलाया तो था अभी रखा तो था.
Yeah, it was there. I saw.
Yeah.
Yeah. On the screen it was there. Yep. We'll move ahead. Okay. Dr. Ruchi Dana, partner and executive board member, Dana Group. Walid Saad, country head and chief financial officer, Saif Belhassa Holding. Moderator Aman Malik.
नहीं दिलाशा है.
क्या?
One second. अमन मलिक बोला आपने भी.
नहीं, अमन मलिक लास्ट में बोला ना.
हाँ तो मॉडरेटर तो दिलाशा है ना लास्ट में. मतलब
नहीं, कॉन्ग्लोमरेट्स की बात हो रही है ना. ये जो ब्रेक के बाद आते हैं ना हम लोग.
अच्छा ठीक है.
हाँ, ये अभी हम yet to announce. Just a second. This case for alternatives वाला session, right? हाँ, इसमें है राजेश रंजन, head of investment, Ali and Sons Holding LLC, Neil Cabral, CEO, Family Office, GFG Alliance, Nandivardhan Mehta, CFO, CAF Investments, and Utkarsh Sinha, Managing Director, Bexley Advisors. Dilasha is moderating.
Correct.
Perfect. ठीक है. Then we'll have another networking tea break. और इसके बाद होगा हमारा फाइनल पैनल डिस्कशन, हाई इम्पैक्ट इन्वेस्टमेंट्स. इसमें स्पीकर्स है रामी हराजली, चीफ इन्वेस्टमेंट ऑफिसर, इंटरनेशनल वेंचर इन्वेस्टमेंट्स होल्डिंग, फैजल अली, ग्रुप CIO, गर्गश ग्रुप, अयास अलगुल, ग्रुप वाइस प्रेसिडेंट फाइनेंस ऑफ यस होल्डिंग टेक्नोलॉजी, एंड मोना सारे, हेड ऑफ GCC PE Blue Fi Capital. Malvika is moderating it.
Correct.
ठीक है. This one gets over, end of the conference. Again, I'll thank all the partners, and then that's about it. There's no high tea or anything, right? End of the conference.
We have high tea, yes.
High tea. So then I'll invite everyone to join me for high tea.
Yes.
Done? Hashtag हम लोग कुछ डाल रहे स्लाइड या मैं ही अनाउंस करूं? Generally we put one hashtag, but if it's not needed, I'll just announce.
हाँ, you can do that. Yes. हाँ.
Perfect. ठीक है. Super.
So I think we are sorted. बस एक slide change करना है बस, right? ठीक है.
सर स्मूथ टॉपिक का थीम इज दैट ना वो स्लाइड्स के बाद अपने को लाइव जाएगा ठीक है उसके बाद हाँ उसके बाद हम लोग जा सकते हैं नहीं वो होगा ऐसे ही होगा सेम बिकॉज जैसे पैनल हो रहा है चेकर लग रहा है तो वो पूरा सीक्वेंस
सर जैसे नेक्स्ट पैनल स्टार्ट होगा लाइटिंग चेंज होगा साउंड होगा वो सब करना पड़ेगा आपको राइट जैसे
whenever the session is being changed and when the panelists are coming you have to focus on the lights everything then you have to give the walking music every time okay? And also whenever you are seeing if the setup is being changed you can give the music okay? so that it doesn't look bad
mounting on the stage also in that direction you have to increase the music also are you sure
yes
ठीक है बस slide
बस
change
मुझे
सुमिधा do we have the PPT of Nitesh ready जो कॉन्फ़िगर करना है पूरा अच्छा ठीक है मैं एक बार देख लेता हूँ
पहला ही स्लाइड है। Good morning, everyone. Good morning, everyone. On behalf of VCCircle. Hello. Good morning, everyone. इसको ठीक करवा लो दया, इसको ठीक करवा लो। लोग आएंगे तब तो खाली के बाद स्टार्ट करोगे। Good morning, everyone. Good morning. Good morning, everyone. On behalf of VCCircle, it is a pleasure to welcome you to the LP Summit. At VCCircle, we are committed to tracking, enabling, and amplifying India's private capital ecosystem. The Indo-Gulf Innovation Corridor garners momentum. Launching the chapter of LP Summit was a natural extension of that mission. At VCCircle, we are committed to tracking, enabling, and amplifying. At VCCircle, we are committed. At VCCircle, we are committed to tracking, enabling, and amplifying India's private capital ecosystem. As the Indo-Gulf Innovation Corridor gains momentum, launching Dubai chapter of the LP Summit was a natural extension of that mission. Think of this corridor as four forces coming. The two replace historically India and Dubai. Historically, India and Dubai has seen primarily through the trade lines, goods moving on. Globalization in tech. That's represented here. This is represented here. India at the bottom with skill and talent, we at the top with capital and access.
हाँ मतलब
Check, 1, 2. All right, ladies and gentlemen, in a short while, we're about to get the program started. I'd like to request everyone in the pre-function area to please come inside the hall and take their seats. Well, that's if my voice can go all the way outside, only then. But nevertheless, the program is about to begin within the next couple of minutes. And I request everyone in the pre-function area to please come inside the hall and take your seat. Thank you. All right, ladies and gentlemen, we're about to get started. I'd like to request everyone in the pre-function area to please come inside the hall and take your seats. We're about to get the summit started within the next few minutes. Thank you. right, ladies and gentlemen, we're about to get started. I'd like to request everyone in the pre-function area to please come inside the hall and take your seat. We'd also like to request you to please keep your mobile phones on the silent mode. The summit is about to begin now. Thank you. Assalamu alaikum, ahlan wa sahlan. Good morning, ladies and gentlemen, and a warm welcome to all of you to the Limited Partners Summit in Dubai for the second time. You know, the beauty about catching up like this in a group is the fact that though we plan to start at 9 a.m., the fact that we all get to catch up with one another as an industry, as a fraternity, is that the group discussions go on so that we can only start at 9:45 a.m. With no hassles, no problem at all, because that's what the entire day is about. It's about connecting, it's about ideating, it's about collaborating. So let that start right away. Why just wait for networking breaks when we can do that right now? So this is good indeed. It's lovely to see that kind of energy here. It's lovely to indeed see those smiles and that energy come together. So once again, my name is Kavya R. Shavali, and I extend a warm welcome to each and every one of you here to the LP Summit in Dubai for the second time. Now, when you get to combine Dubai's appetite for scale and Indian appetite for disruption, you essentially get the world's most ambitious ecosystems coming together in one room, and that's the kind of presence that we're feeling here this morning. Now, as you can all notice, we are officially starting off with the program. I'm going to be requesting all of you to take your seats. We can come back to those mobile phones in a while. We have ample networking breaks for that as well. We can check our mails, our messages, our work, all of that during the networking breaks. Ladies and gentlemen, I'm going to request you all to please take your seats, each and every one of you. Let's have you all take your seats right across the hall, each and every one of you. Thank you so much. Now, this is where I do have a confession to make, because I believe that if innovation had a passport, it would have UAE stamped on one side of the page and India stamped on the other. That's why it's time for all of us to come together and let's chart where that passport goes next. So yes, this is a room where you come together because you don't just get capital, you get momentum, you get the vision. And that's why we're here for a very stimulating showcase. And let me also inform you that as you take a look at the LP Summit happening in Dubai for the second time, we've actually had 16 successful editions in India. And this is the second edition of the Dubai chapter right here. And we all believe that Dubai is the beacon that has emerged as an important confluence of capital from investors across different continents, which is why it is only befitting to be back here to host the summit for the second time. That being said, before we move forward, I'd also like to take the opportunity to thank our incredible partners in helping us put this conversation, this platform together. Our presenting partner, Dubai Economy and Tourism. We'd like to thank our session partners, Interpolitan Money, Nissus Finance, Bexley Advisors, and HDFC Capital. We'd also like to thank our knowledge partner, Omnivore, experiential partner, Champion Infratech. And also during the networking breaks, do take a moment to connect, chat, and also explore our partner booths that are just outside. This is where you can discover exciting initiatives, fresh offerings, and ideas. We also like to expect you all to keep the conversation coming. We get to hear insights from this side of the hall, but I'm going to urge you all to keep those conversations coming using the hashtag LP Summit Dubai 2025. I'm going to repeat that one more time for all of you to share it across social media. Hashtag LP Summit Dubai 2025. With that, without any further delay, it's time to set the tone and the context for all that the program is about to offer. So I'd now like to invite someone who comes with an experience in growing and scaling technology businesses. We have with us Anitesh Dharam, Business Head VCCircle, to share the context and to welcome you all. So let's welcome him with a huge round of applause first so that he can welcome you all to the LP Summit Dubai. Ladies and gentlemen, Anitesh Dharam.
Good morning, everyone. On behalf of VCCircle, it is a pleasure to welcome you all on this occasion of LP Summit. This is the second chapter of LP Summit Dubai that we are doing. But like I also mentioned, we have been doing LP Summit in India for last 16, 17 years. VCCircle was and is one of the pioneers in tracking private capital market in India. Started in 2007-8 when the ecosystem was very small, 6 months it was the general timeline for any deal to close. In one half year, you would have around 10-15 deals in India in private market ecosystem, and that is when somebody named Sahad who started tracking Indian private capital market through a blog, and that converted into a media platform. And then now we have multiple verticals. We have a data business, which is focused on tracking Indian private capital market in terms of financial and other deal informations. The genesis of this edition of LP Summit, when we started looking at Indo-Gulf Innovation Corridor, we felt that it is right for us to start a Dubai chapter of LP Summit. Thinking of this corridor, there are four forces coming together who are driving this corridor. The innovation engine that basically brings India on the forefront in terms of the number of startups that we have currently. We have around more than 2 lakh registered startups in India. The global hub, which Dubai is, which UAE is. And there is $2.6 trillion of dry powder sitting across the globe to be allocated to the right risk-reward ecosystem. And obviously the global gateway that UAE provides. So these are the 4 broad forces coming together, helping Indo-Gulf corridor mature. The two-way bridge thesis that we look at, we'll call it basically the transnational innovation corridor, where Dubai comes with capital and access to the ecosystem, and India comes with scale and talent. Like I mentioned, we have more than 2 lakh startups registered in India, but that number is still lower than the actual number. On our platform, we track around 5 lakh forum. I'm sorry, I'm slightly nervous. I'm missing a few words here and there, but we'll continue and close it. Yeah. Right, the scale, the pillar 1, the Indian part, the scale part. Yesterday I was talking to Mr. Ajit from Evolve Essence, and he was saying, like, when in 1990s, India did not even have something called venture capital as a term. So they used to call it unquoted investment. That is what he told. I have never heard of that word before, but that is where we started. I think in 1997, when the IT policy was launched in Karnataka, Bangalore emerged as the Silicon Valley of India. I have spent a lot of my time in Bangalore, so I know that city very well. In every cafe, you will find founders sitting in corners, working, not try to occupy the prime spots because they don't pay much, sitting in some corners, building companies. But that is what Bangalore is. That was the foundation that was laid over there. In 2016, when the Startup India initiative was started, that led to a lot of different kinds of initiative and policy changes that government did that accelerated the ecosystem in India. Now, in terms of depth, in terms of talent, in terms of innovation that is happening over there is comparable to anywhere else in the world. But obviously, there are shortcomings, there are gaps. There is one specific segment that I would want to talk about that is a certain kind of change that is happening in India, and which is very interesting from VCCircle perspective, is the emergence of new LP class in India, which basically is the family office segment. We track this segment very aggressively. In last 5-6 years, this number has changed. I'm talking about the registered family offices in India. It has changed from 50 to around 350. This is the registered family offices, large family offices, huge amount of wealth to be allocated to the private capital ecosystem and other asset classes. Currently, what they are doing is, in the private market in India, they are taking smaller bets, trying to co-invest, mostly in VC rounds, specifically on angels, angel kind of checks. But we are seeing this ecosystem maturing, and when we did analysis on Indian market in terms of what is the depth of this this family office space in India, what we figured out is, although we have registered entities in the form of family offices, which is 300, we have around 2,500 entities or businesses that we call as legacy cons, which are sitting with more than 500 crores of capital to be invested in different asset classes. So this is one segment which is propelling the domestic capital growth in India, and we at VCCircle are working on bringing this segment even from investment perspective to UAE. In fact, DET is one organization through which we are working on that as well. Right. So this was about India. Moving across to place you all know better than me, but what I see fascinating, to be very frank, this is only my second time here, and last time I did not spend much time. This time I did spend 5 years even before the event to understand this ecosystem better. I really feel that there is a huge potential
when these two set of very different ecosystems comes together. Here, this ecosystem is very niche, very small in terms of size, in terms of even the number of investment or the number of rounds that are happening. But it does open a lot of door for Indian founders. We have Nidhi from Samosa Singh sitting here. I'm not sure if she's still here or not. She has a 4-month-old baby. She came here just to set up a plant here because of different reasons. And as per the GEM ranking, this ecosystem sits at the first position in terms of the ease of doing different things here, right? So these two pillars, if they come together, there is a lot of meaningful change that can happen, right? One thing very interesting that we saw from our data is the velocity of how things are moving here. 2021-22 was the peak of global startup ecosystem growth. The number of rounds, founding activity, everything was at its peak. And since then, it has slowed down a bit. In India, we are roughly doing around 50% of what we were doing in terms of founding activity in 2021. This is not the same here. I have seen that at that time also there were around 5,000-6,000 companies getting founded in UAE at that time. Even today, the number still remains the same. So there has not been any decline in terms of funding and founding activity. Which is a very good indicator of the amount of velocity that is this ecosystem seeing. Also, there are 90 accelerators that has come up here, which shows that there is a great potential in terms of newer businesses getting incorporated here. Talking about the symbiotic relation, the complementary powerhouse that these two ecosystems are, like we discussed, scale and talent and capital and policy. We will deep dive slightly into this. If you look at the proof of what is happening currently, we have moved away from one-way trade kind of relationship where was capital and goods moving each way to a symbiotic two-way relationship where more than 20% of the FDI currently getting invested in Dubai is coming from India. In fact, we have more than 80,000 startups registered, which are Indian-owned companies registered in Dubai, and the value of the trade is around $84 billion, right? So these are numbers which represents the scale at which this collaboration is already happening. But I believe that at the startup ecosystem level, we have still some work to do. This is happening mostly at the broader macroeconomic level, right? And some of the policy changes that have been done recently is also fueling this growth. The SEPA, the framework, obviously supporting all the new entrepreneurship activities and other things. The Golden Visa program supporting all the tech talent and other people. And Dubai's D33 agenda, which obviously has its, one of the core objective is to improve the startup ecosystem and their own plan to double the size of the economy by 2023, right? So these are the major drivers of the ecosystem in India and UAE. The structure enables the policy changes. And while Dubai is the centerpiece, the broader GCC is also moving in the same direction. There are a few interesting trends that we saw in other countries as well. So in Saudi Arabia, we saw that there is a lot of focus on desert tech and infrastructure-related startups. Then in Bahrain, it is being built as a fintech hub. There are a lot of fintech companies from India getting registered there. Oman, again, a lot of policy changes and all are incentivizing through different means, looking for bringing more startups into different countries. So there is a trend, obviously, for sure, which is going to drive all these things. If we put everything together, the investment thesis that comes out is a self-reinforcing innovation corridor. If you look at this thesis, is a very strong thesis for any kind of investor to have a look at this collaboration that these two countries can bring together. Obviously, the scale part, India's scale and talent creates a deep pipeline of world-class innovation and startups. The UAE role as a global hub, obviously the ease of doing things here, that brings a complementary skill set. Third, the policy acceleration, the other policy initiatives that we saw across Indian government and also on the collaboration part with Dubai and India. And the fourth is basically the two-way flow of capital, which we saw already in the form of the trades and other things that are happening already. So this is all on this part. Hopefully, the different panels that we are going to discuss, which are mentioned here, we will deep dive into all this through all these topics, and obviously we'll hear from experts I'm no expert. My expertise lies in tracking what is happening in the market in terms of data. So we will have deeper insights coming from the real experts who have spent 20, 30 years of their career in this domain. Thank you, everyone. Thank you for joining us for the LP Summit. We will have multiple breaks and we will try to interact through those breaks as well. Thank you. Kavya.
Thank you very much, Anitesh. And as much as we are in the land that has been taking oil to create the present, it is data that will also fuel our decisions in the future. So that being said, thank you so much for those data points. Very, very pertinent, I must say. So that being said, let's now prep the stage for our upcoming discussions. We will be having a lot of fireside chats. We'll also have a lot of panels coming in. We've got some of our speakers already lined up here inside the hall. Our very first session, as we are talking about the Limited Partners Summit, but this is all about unlocking unlimited partner opportunities. Big question being as to how do investors on both shores navigate regulations, or for that matter risks, as well as ESG in order to win the future. There are more questions coming on our minds, but let's get the answers from our speakers. First up to spearhead our very first panel discussion, we have with us Malvika Malu, Senior Correspondent, VCCircle. So Malvika, let's have you on stage. You and I will go ahead and invite your panelists, one after the other. And with that, let me go ahead back to back. Let me go ahead and invite our incredible speakers to come on stage so that we can get the discussion started. Now, our esteemed speakers, first up, we have with us Abhishek Nair, Head New Ventures, Sharjah Asset Management. I'd like to also please invite Ajit Kumar, Managing Partner, Evolvence India Fund, Suresh Vaidyanathan, Board Advisor, Rainmaking, Forward Footing, and Gara Abdul Kader, Senior Vice President, Crescent Enterprises. All right, let's pump in some energy inside the hall. Please put your hands together to welcome our very first set of speakers for our first discussion, which is all about navigating the Indo-Gulf Investment Corridor. And Malvika will be the one extracting all the relevant insights from her fellow panelists. So with that, Malvika, over to you.
Hi, good morning everyone, and welcome to our first session for the day, where we discuss how limited partners are navigating the Indo-Gulf corridor. India and the Gulf have always been connected through trade, workforce, energy, and strategic ties, but the last few years almost feel like a new chapter. India-Gulf story is not about an economic bridge anymore. It's becoming one of the most important capital corridors in the world, with LPs, sovereign funds, family offices, VCP funds shaping a two-way corridor. So on one side, you have India, one of the fastest growing major economies with $1 trillion digital economy in the making, a deep startup ecosystem, massive infrastructure ambitions, and a maturing AIF landscape. On the other hand, you have GCC, a region undergoing one of the fastest economic transformations we have seen, sovereign wealth funds deploying at a record scale, family offices professionalizing and diversifying, and expanding into tech, climate, logistics, consumer, healthcare, manufacturing, and beyond. In today's panel, we unpack how LPs navigate this evolution as not as two separate regions, but as one integrated investment thesis. But before we dive into the core questions, I'd love for each of my panelists to set the stage with a quick 30-second introduction of who you are, who you represent, and why the Indo-Gulf corridor is strategically important from your seat. We'll start with Abhishek and then...
Good morning, everyone. I'm Abhishek. I represent Sharjah Asset Management. We are a sovereign wealth fund in the Middle East. We have been investing across asset classes, private equity, venture capital, public equity, real estate. But most of our investments have been in the developed markets as of now. Now, the next 5-year mandate or strategy is to look into emerging markets like India and China. And how we go about it, we'll discuss over the course of the panel. Thank you.
Yeah, good morning. This is Ajit Kumar, Managing Partner at Evolvence India Fund. We are currently into Fund 5, raising capital and deploying. An India-focused differentiated private equity and venture capital model. The Middle East corridor is immensely important to us because we had our origins in Dubai. and we have a number of investors in the region, and also we have brought a number of our investor companies to the Middle East. So, raising capital, bringing business opportunities, it's very, very important to the whole ecosystem, basically.
Good morning, everyone. This is Suresh Vaidyanathan. Great to be in this fantastic gathering and to be part of the first panel. So I've been a resident of the UAE for the past 30 years, and I've been managing large family-owned conglomerates and investment companies in the UAE. And until recently, I was the CEO also of the Abu Dhabi Food Hub, which is the largest food hub in the region that's being established in Abu Dhabi. And right now I am advising and on the board of several companies, helping companies to scale up in the region, particularly the UAE, and also working on a lot of interesting projects impacting both India and UAE, including the food corridor project. Thank you.
Sabah al khair. Good morning, everyone, and very warm welcome to everyone who's joining us from outside of the UAE. I'm Ghada Abdel-Qadir. I'm a Senior Vice President with Crescent Enterprises. It's a diversified business group with interests across ports, logistics. We invest across asset classes like private equity, venture capital, and we have operating businesses as well. We're part of the Crescent Group, which is a 55-year-old family-owned business. Our roots of the group is in the upstream oil and gas, under the brand name Crescent Petroleum, which has operated the main concession for the Emirate of Sharjah, and now with main operations in natural gas predominantly in Iraq and Egypt. And Crescent Enterprises is the diversified arm of the group, where we invest across sectors, stages of the companies, and regions as well. India is of particular interest to us, and we've been investing in India since 2017, and with more commitments coming across the stages and the sectors that we're looking at. Looking forward to a great discussion.
Thank you so much for that. We'll begin with the first question. Ajit, directing my first question towards you, could you tell us how the relationship between the two regions has evolved through the years? And from your vantage point where you sit at, what would be the single biggest catalyst for this change?
I think the question is very pertinent. Possibly that could be a prelude to set the context over here for the remaining panel discussions. You see, it's generally thought that the Middle East has got a lot of investable surplus, and which has not come into India very much in the past. I mean, the feeling was like that in the past. Obviously, that is changing. I'll talk about it. In order to understand what has happened, especially for the younger audience here, to reflect upon it, when India opened up to the private market investment activities way back in 2004-05, a lot of money came from the Middle East, actually. And the period from 2008 to 14 has not been good for India. Investors lost money. And also what exacerbated the situation has been some of the very, very big ticket, well-known deals like the Emaar MGF, the Etisalat, the Gulf Finance House deals, extra, didn't go the right way, and investors lost money, basically. So that created a negative sentiment towards India. However, after 2014, the new government came and economic reforms and policy changes and also certain assurance to the region, the money started flowing into India. But, there are two major catalysts over the last few years which have changed the landscape completely, which are one, the startup and tech innovation happening, that thriving ecosystem over there, and especially for UAE, something called the CEPA, the Comprehensive Economic Agreement, which has been signed, and that has elevated the cross-border activities in terms of not only just trade and commerce, but also private capital investments in a major way, actually. So these two catalysts have really helped, actually, yes.
Right, thank you for that. Suresh, based on your experience of working through the region for so many years, could you talk about any other factors that are also driving this sort of change? How about like geopolitical diversification? Does ESG come into play? Are there any other factors beyond the surface level that we may not be aware of?
No, I think this is really exciting times for the UAE and India, and not just UAE but even the wider region like Saudi, and for us to be in this time frame. Because what I see is that there is a multi-level alignment and synergy. So right from, say, the president to the prime minister relationship, which is actually a kind of a driving the activities, down. And then there is a clearly articulated ambition in terms of numbers when it comes to where both the countries want to reach in terms of the trade volumes, and particularly the non-oil trade volumes, and as well as on the investing side. Because I think over the last few years, the trend has changed from a pure India and UAE as pure trading partners into also being investment partners, and investment flowing bilaterally, so not single-sided investment. And again, there is also a lot of a business-to-business alignment as well, because I think people see opportunity from here as India being such a massive consumer market, and UAE being a bridge to the world with the kind of connectivity that is available. And then finally, I think at the level of the people also, because I think Indians are the majority here when it comes to demographics. So there's a lot of kind of cultural synergies as well that come into play. So this has created, I believe, opportunities across several critical sectors where capital can flow from both sides to each other, as well as the trade can also improve in the coming years, and we can talk more about it. Yeah.
Got it. Thank you. Abhishek, Suresh sort of highlighted how the relationship is now moving towards more of an investment sort of relationship. Could you talk about, as a sovereign wealth fund representing the interests of the state, how do you look for opportunities in the region, in India market particularly? And how does this fit into your overall mandate that you have for the investment opportunities in India?
So unlike usual LP style investing, sovereign wealth funds have slightly different mandate. Of course, returns is it's a big thing, but we look for how, first of all, diversification of our investments. We look at how we can bring the technology from markets like India and the emerging markets. They're the tech hub. So how we can bring the technology to the local ecosystem and support the local ecosystem. We also obviously looking at emerging markets that are growing in sectors like tech, mobility, healthcare. So these are sectors where we would like to invest across India because these are the growing hubs. And key thing which we look for when we invest in any individual asset or a fund is we look at the value. So I often tell my team, do not look at the valuation, see what value they can add to us. By what we mean value is how these companies from India, how they can come here and add value. So we have a portfolio of 20 different companies in 12 different sectors. So how some of these companies, maybe they can provide a technology service, maybe they can improve the efficiency for some of our companies. So how these companies can add value to our portfolio. So this is a key important mandate for us, and obviously a mandate for the government. So it's not just portfolio companies, we might also look for any investments where it can add value to the emirate as such and improve a demand supply gap in the emirate, a technology gap, something that can add value to the residents and the citizens. So if such kind of opportunities come, we look at this. These are plus points. So this is our main mandate.
Got it. I'll come to Gada now. Crescent Enterprises recently announced a 1 billion AED commitment for India, Southeast Asia and GCC. While you have been investing in the region for a bit, could you help us what changed this time and what is the thinking, what is the longer term strategy that you are, longer term objective that you're trying to attain out of investing in the region and making a significant commitment?
Sure, thank you. So our approach to investing is typically of a long-term approach. And where we start getting into a new strategy or a new market, we tend to take baby steps first and then expand as we go through the way. And that was clear with the recent commitment of deploying close to $300 million in growth equity mid-market opportunities. And India is one of the key markets that we're looking to deploy capital into. As I mentioned, we started investing in 2017 in India, and that was the baby steps. We've led the Series A round of a company called Fresh to Home, and kind of followed on with the investments. We helped them to come and set up here in the region. They have been operating in the UAE and this part of the world for quite some time now. So I think just going one step at the bigger picture again, and without repeating, the data that we've seen and my fellow panelists, what they have mentioned is, as a private entity looking to invest capital in new sectors or new economies, I think we get a lot of comfort from the policy reforms that we've seen, the kind of this trade architecture that we have seen happening and evolve between India and the UAE in particular, from $170 million in the 70s to $100 billion this last year, right? FDIs, we've talked about it, and it's no more one way or one direction. In the UAE, over the past 5 years, around $26 billion have flown into India in the forms of FDIs. Similarly, around $16 billion from India have flown into UAE companies as well, and setting up here in the UAE. So that kind of created structural changes that help private investors get comfort with deploying more capital towards these markets. The way we look into India, of course, fundamentals are very strong. It's a very high growth economy. There are multiple sectors. I mean, you speak with everyone. Every sector in India is hot. Every sector you find multiple opportunities, and it's about how to navigate these opportunities. And we focus on, high growth opportunities, companies, sectors that align with our existing, investments. We have investments, over 60 investments across multiple sectors. But more importantly, how we provide beyond the capital. What is the strategic value add? Because it's not capital that companies are looking for, it's the strategic value add. To give you an example, we recently invested in a company called Flip Spaces, which is an integrated design, build, and supply for commercial spaces. So they basically take a full, they deliver office spaces, commercial spaces for SMEs, for large enterprises. We've closed the investment in September of this year. In November, the company has set up operations already in Dubai, registered, and won its first 2 contracts. And that's the type of opportunities that we look into, how we can bring, technologies, how we can bring businesses that can expand here in the UAE, and how we can leverage, our network, our global scale to help them scale further.
Actually, the investment around Flip Spaces that you mentioned, this is an interesting point because you're looking at direct investments in India. How do you go about identifying opportunities? Because direct investments require a lot more effort than indirect. It requires sort of sector expertise. But how do you identify and evaluate these opportunities in India? Secondly, you mentioned almost all sectors are hot in India right now, but what particular sectors catch your eye?
Sure. So when it comes to looking at or identifying opportunities outside of our home market, which is the UAE, again, our global scale help us with that. And it's a network that you have to build throughout, and we have to be proactive. And this is something we understand from day one. When we started investing, in the VC space in the US, We have been receiving, cold calls from banks, from people we've never heard of. And I mean, without anything, but if it is a hot opportunity, if it's a good investment opportunity, it then raises the question why others who are from that market have not invested in, and why it's coming to this spot just to raise capital. Because initially, people had that perception that it's very easy to raise capital from this part of the world. Capital is abundant, and we're just investing anywhere. I'm glad that this is over now, and they understand how sophisticated this region is. And that's why we build networks to give us that access, direct access. We do have presence in these markets, on the ground presence. And also the founders or the promoters that we have supported becomes then one of the referral to us in terms of new investment opportunities. There is also a very kind of a niche sector in India, which is the family-owned businesses. And us as a family-owned business as well, we kind of click together because we understand the ethos of family businesses, but we place a huge kind of focus on corporate governance within our own company. I mean, again, we're a family-owned business. We don't have a single family member that sits on our investment committee. We have independent members on our investment committee that are more than the executives within. So setting that governance helps grow the businesses. And I think also addresses to your point, Ajit, that you mentioned earlier, where you change the shift in the perception of you're taking money from outsiders without really being able to give what it takes to manage other parties. So we do evaluate companies, we do select opportunities, and we do rigorous due diligence. I mean, at times they don't like us, but it is what it is. I like to always think we're entering companies as if we're holding them forever, because that gives you then a lens of, making sure that you're really partnering with the right partners. But don't get me wrong, we have to identify, a clear exit path from day one, because this is at least when I make money. But really looking at particular, criteria within companies, we like companies that have shown scalability, that have efficient, unit economics. Unit economics that are proven, have grown nicely, and yet needs that additional layer of growth with that capital, and have grown within that capital efficient manner. And most importantly, the underlying team members that will drive. Just quickly on the sectors, I think we're seeing a lot of interest, and what interests us more is things like in the manufacturing space, advanced manufacturing. Healthcare is one sector that we're focusing on, financial services as well, and of course consumer sector. But again, within that we follow a thematic approach.
Got it. Thank you for that. Abhishek, I think Sharjah Asset Management approach is more towards indirect. Could you tell us about your idea of identifying new opportunities? How do you decide how to mitigate the risks that come along with indirect investments? And essentially, when you're looking at any bet, what would be the filters that come into your mind when you decide to invest in them?
Yeah, so we have not just direct, but we have both a fund strategy and a direct strategy. And like Gada mentioned, either you need to have a team on ground, or you need to have strong support or strong LP network. So we don't have a team on ground, but we have strong relationships. So we're building a pipeline of LP networks. We're also trying to build a strong relationship with government entities. This is what we're doing with all emerging markets, because relationship with central and state governments is key, especially when it comes to repatriation of the money, when it comes to taxes. A lot of benefits sovereign wealth funds can get with strong relationship with government entities. And obviously there's a lot of different risks, like currency risk coming into play. There is obviously policy and regulation risk. different states have different regulations. We have actually looked into our investment into a financial space sector, NBFC. We are almost going to deploy capital, and this particular banking, they were more focused in Karnataka, which is a state in India. They have heavy concentration there, and then a rule came maybe last quarter that regarding cash collection, and ordinance was passed. So we had to pull out of this deployment of capital here. So this is an example where we look at investments where the company is not concentrated on a particular state, because every state has their own rules, but sort of a pan-India presence the company has. Yeah, so this is some of the key things. And like again I said, if the company which we are looking to invest, we can bring them here, that adds a lot of value and a lot of points. So we oversee a lot of risk if we can do that, because that's highest priority. I think 50% of a weightage goes to that. So that's how we sort of mitigate risk.
Got it. Ajit, while you do direct investments in India, I'll ask you about the LP side of it. You present you're at a very unique intersection of the two markets. How, in your view, has LP GP dynamics between India and UAE, GCC region in particular, changed through the years, particularly last 5 years? And how do you, in terms of the conversations that you have with LPs here, what are the expectations now? How are they changing?
That's an interesting question, actually, because in the old days, in our fund one, way back in 2004, a lot of money came from the region, but most of the people didn't even know what they have been committing to, basically. If you look at that, and currently, it is way more sophisticated. Gada alluded to it, actually. So it's much, much more professionalism as it can be anywhere now, because more professionals have come, everybody got educated over the last 20 years. So the questions to that extent comes to nitty-gritty is basically not the general questions about, what kind of diligence you do, or how do you handle this issue or that issue in relation to a particular investment, but they get into granular details about, how money getting allocated to whether it is the management fee or the carry, the waterfall, to kind of, reps and warranties, clawback. I mean, it has become completely sophisticated, as good as it can be, like the Western world, basically. So, we like to interact with LPs who are more educated, because, when you are transparent and you don't have anything to hide, that is a welcome thing. So we have some of the other U.S. government institutions as LPs. About 70% of the capital is from U.S. pension funds, endowments, insurance companies, and institutionalized family offices. So the kind of diligence they do, and the parameters or the criteria they use, including external validators, whether it is for background checks or ops diligence, etc., is being practiced in the region now. So, when that kind of an environment exists, it's very healthy for LPGP relationship. And I think good times are here, and I wish our LPs well, as well as the GP community very well. Yeah.
Can I ask you about the challenges that still remain in your conversations with LPs when you are convincing them about an investment that you are about to make? What are the biggest risks and what are the biggest questions you still have to answer?
I'm glad you asked that, actually, because the biggest challenge is obviously, the Indian rupee. Some of the investors say, after the tax and the rupee depreciation, there is nothing much left. So and obviously the valuation in India is high, unlike other market, because there is a reason for that. Indian corporates possibly, make the high quality returns, and the velocity of the returns are very, very high, and it always commands a premium. But when you pay high, you underwrite a certain amount of returns on a particular investment, and when the entry valuation is high, your holding period goes up in most cases, actually. And that's a challenge. And then in addition to that, the almost 3-5% currency diminution every year. So I tell investors, look, in our financial modeling, we provide on an average 3% currency diminution, and whatever you project is after that. And even though, there has been occasional period of currency sliding more than 3-4%, but on an average, if you take longer term, horizon, it's about 2.5 to 3% basically. So we take that into account. This issue comes up always as a question from investors. The other one is tax related issues. I think the Indian government need to reform and refine the tax codes to make private equity venture capital investments more easier. The reason is, just to quote a number, the GDP, the Indian private equity venture capital investment activities to the GDP is to the tune of about 1.5%. Whereas in the US, it's about 6.5 to 7%. So that's on a GDP of close to 30 trillion. You can imagine the kind of activities, because these are long-term patient capital which has got multiplier effect on the economy. Unfortunately, the people in Delhi possibly is not getting that message. I think some changes on the tax code and some initiatives on the currency. But on the currency side, I should tell you, 7-8 years back, if you wanted to hedge the currency, it has been prohibitively expensive. It used to be costing about 6% or so. Some banks in Singapore used to do that. Now we are finding Indian banks are doing at a fraction of the cost actually. So that's a welcome change. But if the country, the Reserve Bank of India and the finance ministry can do something to hold the currency steady, I think it should happen. The reason is the dependence on dollar is slowly going down with the UPA and local currency trade. In fact, even with UAE, and the way the India is attracting foreign direct investment, possibly the dependence on rupee may go down, but obviously, India want to export more, so they may have to import more intermediate goods. And on that side, the current account deficit is creating a little bit of pressure, and that is why the rupee is kind of a bit weak these days. So it's a matter of time. Possibly you may see, in the next few years, possibly the rupee is also holding steady or maybe even appreciating. So these are the three concerns mostly I hear about basically.
Got it. Abhishek, what's your perspective on the challenges that still remain and what can be done to deal with those? What are the areas that still need work that you hope are better in the future?
One thing, like Mr. Ajit rightly mentioned, currency risk is really high, and it's a big challenge for us. But of course, if it's depreciating 4 to 5% every year, but of course, with higher risk, we look at higher returns, right? So obviously, we look at higher alpha when we invest in India. Obviously, this is a risk which we try to mitigate. But other challenges, I was just speaking with Ajit, that when we invest in China, they operate as one country. There's no separate states with different mandates, different strategies, different agenda. There's a central system that our government department they deal with. They handhold us, they take us, and this kind of gives comfort, especially when you're a government entity investing in emerging markets. This gives a comfort. But when you go to India, we don't have one entity to deal with. We go to Kerala, they say come to Tamil Nadu, come to Karnataka, and they all sort of have different regulations and departments saying different things. So we'd like to deal with one central entity. Unfortunately, we're not able to do that now, but I'm sure we did not reach to the right people. But like I said, this is a big challenge for us when we compare investments in China or to India. And this could be because of the political system difference in two countries. But this is a big challenge for us as of now.
Got it. I think we have time for one more question. Suresh, I'll direct it towards you. While there are a lot of risks, the pace of investment has been more than it was before. What areas do you think will see a lot of capital allocation in the coming 5 to 10 years? Basically, what are the new opportunity places that investors in this region could actually look out for?
Yeah, like before I answer that, I think in terms of the challenges, I think right now, like as I said, there is this transition that is happening from India and UAE as trading partners to more stable long-term investments happening on both sides. UAE in particular is now trying to attract investments into advanced manufacturing and technology and more projects that create a long-term value creation. So one of the challenges is actually for the large Indian groups to be able to move capital out of India and to be able to invest here, given the regulations. It's not that process needs to be optimized further, because without that we can have all the ambitions, but each project stake with all the approvals and other things required to move capital out. So that's a challenge, right? So in terms of opportunities, I think it will be best to align with the stated ambitions of both countries, the specific sectors. And from a UAE point of view, that is, like as I said, it's an advanced manufacturing where it is not people intensive, because we can't be competitive here. But when it comes to automated or semi-automated processes, or when it comes to things like mobility, when it comes to things like logistics and supply chain, and also technology, which is now a big game. We see a lot of startups come here with the hope of raising money. But I think, like all the other panelists say, I think this is no longer a market where one can come and just raise money and actually do nothing in the region, right? So I think people are looking for a very significant part of the business plan to actually be implemented in this region. So I think that perception is also changing now. So when people come here, we tell them, okay, what's your plan for the region? And does your product actually work here, or your service, is it actually relevant for the region? But in terms of opportunities, there are plenty. But like as I said, we need to try to address some of the challenges, as we move forward.
Got it. I think we have 5 minutes remaining. We can, if there are any questions from the audience, we can take those. Yeah. Can we get a mic there, please? Yeah.
Thank you. Good morning first. Thank you very much for the nice panel. My question is about, do you do underwriting, for example, in your fund? And what is the fund structure? Unfortunately, I came a little late, but I'd like to know what kind of fund structure that you have. And if there is a time, the process of how to onboard in your fund.
I'll take that. Yeah, the fund structure for us is Mauritius based. We have been operating out of Mauritius since last 20 years, from Fund 1 to Fund 5. We have options to move to either Singapore or in India, GIFT City. That is like an offshore jurisdiction in India. We have been, in Mauritius because it's a kind of time-tested jurisdiction for us, and also for our investors. Otherwise, they have to completely go through the legal process again. And what we are seeing is Mauritius also had gone through a little bit of up and down in between, but they have strengthened the regime, and they are okay now. And we deal with the world's largest fund administrator called Apex. And so we are comfortable over there. It's a structure based out of Mauritius. And in India, some of the fund managers use the local SEBI, the regulator. Under the SEBI, there is a road called AIF, Alternate Investment Fund. Many of the fund managers out of India also, they use that structure.
Anyone else?
Good morning. My name is Kunal Vadva. I represent a firm called Venture Soul Partners. We are basically a structured finance fund. My question, and anybody can take this up, is regarding risk perception about India. How do you see risk premium in India over the last 5 years, do you think it's increased or decreased from a external perception? Because in India, what we see as risk perception has gone down significantly. How does the world look at from an outside-in perspective into India?
I think I'll take that first, then I think, as you rightly said, it's the perception. Okay, so perception has to be managed well. And where the media plays a key role, over the last 5 years, if you are talking about the perception has been, risk has been comparatively gone down basically because the economy is doing very, very well, politically stable. All the macro factors are looking very, very good, except possibly for the currency-related issues, that too off late a little bit over the last 5 years. So in terms of, risk perception, for me, it is looking much more attractive now, but some of the institutions, worldwide, whether it's IMF or somebody else, I don't know how they look at it, and they may bring in some nuances for certain political issues. And, that is why I said, it has to be seen what kind of, matter you're looking at it and who is saying politically risk or investment risk higher or lower. So the media management in India is very, very bad at doing that actually in terms of risk, So there you have it. I think if someone else can add on to it, yes.
Just to add to that, I think over the last 10 years, the risk as such have reduced. When we look at investment, we look at the Fitch ratings. Right? I think now India is BBB+, if I'm right. So obviously there's green, yellow and red category where we should and we should not invest. I think India was in the yellow category. Now it's moved up to the green where we are. So obviously the risk has reduced from the international rating systems.
See, if I may add one or two points over there, I don't want to take the country name. It's one of the well-known country. If you do a honest rating, the country's bond could be junk grade. Anybody can, there are some of the well-developed countries, possibly in the G7 category. But so this is what we have to deal with in terms of perception.
I think there was one more question.
Hi, good morning. My name is Deepthi. I am from Stakeboard Capital, Bangalore, India. We are a private equity fund. We are a Cat 2 AIF. Interestingly, our focus sector is also healthcare and allied businesses, along with specialized manufacturing and industrials. I was just intrigued, and my question is to Abhishek and Gada. You both mentioned about healthcare, and you mentioned about manufacturing as area of interest to you. So what in healthcare is anything specific or particular that interests you from India? Or generally, what's the view on healthcare companies and potential investments coming from India? That's my question for both of you. Thank you.
Oh, thank you. So within healthcare, of course, it's a big kind of sector that you can talk about. But within that, we focus on companies who have our strategy. It's basically focusing on mid-market growth equity opportunities. So we deploy anywhere between $25 to $75 million per transaction. And that's basically looking at the category of assets or the companies that are having a kind of migrating from a small size to mid-sized companies. Within the healthcare, we look into multi-speciality, single specialty. We look into also formulations. We look at CDMO, CRDMO. So it's a huge, again, it's just navigating what are the right opportunities within. And as you appreciate and understand there, it's the larger transactions or the larger investors are now looking at the platform play where they kind of start acquiring and building into a larger platform that can eventually be listed. So the white space that we're seeing is that mid-market space where we can create, companies and help these companies migrate from a startup kind of single asset, single location to multi-location, multi kind of investment size. And then add into that governance, add into that strategic, capital, be it, expansion again into the region, if it makes sense. So it's not a clear mandate to us that every single investment that we do, we have to bring it here to the region. And then potentially create that asset that can be, then become an acquisition target or even an IPO for that matter.
I'll just add to that. So earlier I mentioned about the value we add. So we are actually looking at a healthcare company involved in, it's a health tech company involved in screenings and cancer detection. So we have a diagnostic center who does healthcare screening. So this adds value to this center where we can bring this tech and integrate. So we look at this investments. This is on the point when I said how we add value through our portfolio company. And another space we are looking for is IVF. IVF is a growing market in India, and it is really strong in this space. And there is a demand-supply gap in the region. In UAE, we just have, there's just one big player in the UAE. So this is something which we are trying to fill, invest in the IVF space, and probably bring something over here at the same time. And again, we are not close to ideas. We always look at opportunities. Everything really good comes, but we try to see if there's a value we can add.
Thank you so much. I think we might not be able to take more questions. Unfortunately, we have run out of time. But please feel free to connect with the panelists after the session. Thank you so much.
Thank you indeed, Alvika, and thank you to all of our speakers. If I could request you to come together for a group photograph as well. I'll just have you all come together, step a little forward, right ahead, and we'll just capture a quick photo op. And thank you so much for that interaction coming in from the audience. I could see a lot of hands raised as well. But that being said, we'll continue the conversations and we'll of course open it for interaction from you all across our next set of sessions. So we'll hold on to that. And meanwhile, let me also inform you that we're now about to set the stage for our next discussion, which is all about real estate play. This is where we're looking at land as a magnet. Now we know that real estate has become the new engine of cross-border capital flowing fast in both the directions. Gulf-based HNIs have long invested in India's property market, but now India's ultra-wealthy are snapping up prized assets across the Middle East, especially in Dubai. So family offices are treating real estate not just as an investment, but also as a smart way to diversify geographically while staying within a familiar asset class. So the question now is, how is the real estate playbook evolving as the two-way surge accelerates? I'm going to request the team to really quickly set the stage so that we can get our next session started. And while that happens, ladies and gentlemen, please note it's not a break. We're not taking a break, so I'm going to request you all to quickly take your seats so that we can go back to back with the sessions. And after this session, we do have a break, so we'll have ample time for those discussions and the exchange of the business cards as well. But as of now, please really quickly take your seats. Our next set of speakers are all set, and I'm about to begin the discussion. So we'll do that in exactly under a minute. Meanwhile, ladies and gentlemen, please do take your seats. We'll also mark that as a respect for our next set of speakers as well. If I could urge everyone who's still standing, we'll take a networking break after the session. As of now, please do very quickly take your seats. Everyone who's still standing across the hall, really quick. Thank you. All right, so with that, as we begin our next session, this particular session will be spearheaded by Swet Sarika, Assistant Editor, VCCircle. So Swet will be handling the entire discussion as we talk about land as a magnet. The topic itself is pretty gravitating, if I may put it that way. Looks like Swet is ready, but so are our speakers. You're ready, right? Yes, you are. All right, ladies and gentlemen, may I have your attention, please? Everyone, please, your attention. Business cards can be exchanged later. Discussions can take place later. I would like to request you all to take your seats now. Thank you. Thank you again. Swet, let's have you on the stage first up so that we can go ahead and invite your speakers. Let's get the discussion started. And joining us as part of the real estate play I'd like to please invite our first speaker. We have with us Mehermi Chandani, Managing Director of the Paman Group. We also have with us Subhakar Rao, the Chairman of Champions Group, and Manish Agarwal, Associate Principal, Investments and Strategy, HDFC Capital Advisors Limited. Thank you so much for joining us. All right, my guests in the center of the hall, and with Abhishek Nair. Hi Abhishek, if I could request you, let's have you take your seats, or we'll take the discussion offline. Thank you, Abhishek. And for all those who are still standing here, let's quickly take the seats. We have got a break coming up a little later, so we'll hold on to those discussions a little later. But now, let's gravitate your attention to the land as a magnet. Swet, without any delay, over to you.
Thank you so much. Good morning, everyone. The topic is very interesting. As you can see, land as a magnet. We have the title in the background. And it is truly a magnet with all the developments, all the capital pouring in, all the people sort of, migrating to the city. So there is a lot happening. We'll talk about all of those things. Warehousing, residential, fundraise, all of those things will be covered in the next 30 to 40 minutes. Manish, I will start with you and try and understand. You raise capital from across the world. HDFC as a platform, you have mega funds, you've raised capital across funds, 5-6 funds that you manage. What is the conversation that you have with LPs from this geography? What is their take on India? What is their take on real estate investment, real estate growth in India, particularly in top cities? And if you can talk to us about tier 2 cities as well.
Thank you, Shwet. So, we, HDFC Capital, we have a special love for this region. Our largest LP is from Abu Dhabi. And,
that's correct.
We've raised 5 funds, and they've been investors with us across all 5 funds. Mm-hmm. So, over the last 10 years, we've raised about $4.5 billion. Okay. Doing private credit on the resi side in India. And our investors from this region, they've backed us in all our funds. Now, you see, we are at an interesting phase right now. If you look at India, the macros of India have always remained good. People talk about per capita income rising, how the median age is low, and, the demographic dividend is there in India. From 2005, 2006 onwards, the story has been the same. So what's changing now? There are a few things that, are happening now in India because of which the opportunity looks very exciting. Firstly, we have a very stable government. What this means is that any policy initiatives that are being decided, because of the stable government, the policy initiatives will come to a conclusion. There is a big push on infrastructure. So the way in which the tier 2 towns are getting connected to the employment centers and tier 1 towns, it hasn't happened like this, ever before. So just to give you one stat, till 2015, India had about 74 airports. And now in the last 10 years, we have about 85 airports more, just in 10 years. So, the connectivity has improved significantly. SEBI has come up with, AIF-based regulations which provide protection to investors in terms of governing standards, which gives a lot of confidence to investors as to what are the calls that the investment managers are taking. There are reporting requirements, there are valuation requirements. So it's not like the manager can do, things as per their own whims and fancies. So, a lot of development of those sorts are happening. Talking about the market per se, the demand-supply gap in India is significant. So the demand is for 100 units, whereas the supply is only for 1 unit. That is the gap. So, the supply is really, really constrained. Capital is constrained. Banks are not allowed to fund for land, which is where we step in. So, the opportunity is significant, and I think the LPs have also now started to understand it. Till about 2-3 years ago, we were only in conversations with institutional LPs. Now, family offices are also playing a big role. We are having multiple conversations across the globe. So, in Singapore and in UAE, there are many family offices who want to take exposure on the private credit side, on the resi market in India. So, we are hopeful that, these will conclude into some large investment discussions as well. Just to give you one data point, not really a data point, it's an anecdote. I came to Abu Dhabi in 2019 just for a business trip. We were meeting our LPs. And one of the LPs told me, I was meeting him for the first time. So he told me, welcome to Abu Dhabi. This is where magic happens. So, the magic has surely happened for us because we've been able to consistently raise money. I hope magic happens for everyone. And we continue to, bring in more investors from this region into our fund.
But you mentioned, just one follow-up, you mentioned about supply and demand gap. But sometimes supply is also at price points which are not in tune with what end users or investors, so to speak. So there is a gap there also. That also needs to be sort of, taken care of. So that is a big point across markets. I see while people are making units and projects everywhere, be it in Dubai or India, whichever market we talk about, sometimes targeting it at the right audience, at the right customer is also an issue that we face across, if you can address that question.
So, the market is matured quite a lot if you compare the market from what it was 10 years ago. Because, there are regulatory measures that the government has taken like RERA, because of which, the project cannot be stranded in the middle. So the developer knows what will sell in that micro market, and the design and the development is happening as per what the market wants. In India, you will never find a project which is completed but is lying vacant. So therefore, and the demand supply gap is huge in all segments, be it low income segment, middle income segment, and in high income segment. Everywhere, there is a significant demand which needs to be addressed. So if you look at last 4-5 years, majority of the supply has been in luxury segment. That's what people say. But, still stock is selling. It's not like the stock is not selling. Projects are getting constructed. Now, because of RERA, the construction timelines are also set. And if you delay, then, you have to pay penalties and, there are various repercussions.
Correct.
So, the supply is also geared towards demand. It's just that the demand is so humongous in all parts of the value chain that it's really about, where you can maximize the margins.
So we have to say, please come to India, like we say, come to Dubai.
Come to India and partner with HDFC.
Okay, yeah, great point there. Mr. Rao, I want to understand from you, because you have projects in Dubai, like you mentioned, UAE and India also. So we understand that there is a lot of attraction for Dubai real estate market. A lot of people invest here, they live here, they invest here. It's purely from investment point of view also. But what is the take of people from here, maybe Indian or otherwise, to sort of invest in India's real estate market, because that is also on growth trajectory. So if you can talk to us a little bit about this two-way direction. One is fairly known and discussed widely, but what is the interest of people and investors from here and for this region to sort of invest in our country?
India today is no longer a third world country. We're kind of racing to be number 3 in the world. There's a lot of pent-up demand for India as a country.
If you can take your mic slightly higher.
India as a country to invest in, particularly from UAE. UAE always had a comfort level with India. See, Indian HNIs today are almost a third of the investors in the UAE real estate market. Roughly $100 billion market. You're seeing a ton of Indian investments coming in. Same way, India as a market, almost 0.7 trillion now from a real estate play, heading towards a trillion almost in the next couple of years. Phenomenal opportunity for UAE to invest in. India, 1.5 billion Indians. Everyone seeks a piece of the land. Traditionally, the rich have always parked their funds in real estate over the last centuries, right? Now is the right time for UAE investors to enter in a big way to India. India today, for example, some of these beach lagoon communities we're introducing in India have been a phenomenal success here. You've seen Damak Lagoons, Tilal Al Gaf, Mohammed bin Rashid City, Ajiji, everyone get on the bandwagon of creating these artificial beaches and enabling villas, apartments around. It has kind of tremendously helped them double up, I would call it, the velocity of sales as well as the price points. Tilal Al Gaf, for a matter of fact, almost went up over 100% once it was launched. The Damak Lagoons was sold out on the first day. Things like that. The same phenomenon is happening in India. When the Damak Lagoons got sold out, roughly a third of the buyers were Indian. So these are the folks who are sitting in India who are desiring a home kind of like a vacation resort kind of a home. And for that, they're seeking investments in UAE. But now we're creating those opportunities right in India. Having said that, it is really one asset class. India and UAE together have a phenomenal opportunity to align together. We are driving both sides of the ecosystem. Indians invest a third into the UAE real estate ecosystem. UAE now has started putting in funds. I see a lot of LPs, GPs from UAE looking to Indian real estate. Indian real estate is huge. After we introduced these beach lagoons powered by crystal lagoons in India, I realized I met probably at least 250 odd partners, land bank owners who are sitting on 50, 100, 500 acres of land. Otherwise, in general, India, very hard to get large tracts of land. But because of the unique concept we're introducing there is a ton of pent-up demand. And I see beautiful, smart beach cities coming up. So UAE is the right partner for India, having both from a funding perspective as well as the countries being aligned together. Today, you just heard HDFC talk about how they got funded from Abu Dhabi. Similarly, I think it's a great opportunity for a lot of the UAE players to come to India, experience the momentum, right? It's the largest, fastest growing economy. Fabulous opportunity in real estate you can't lose.
Just one point, is it more inclined towards through fund route or direct exposure? What is your experience? I mean, are they coming in as direct investors or through fund route? Because that also gives you some regulation and some checkpoints there. What is your experience? Are people buying directly? Is that also happening more compared to fund route?
Directly it's happening, but thanks to Gift City, thanks to some of the new initiatives coming up, which is enabling the fund route of large investments into India. And I think this is a fabulous opportunity to see some serious double-digit percentage growth. It's not just single-digit percentage like what you might see here in UAE. So that way, India might be a slightly better investment pie.
Sure, understood.
Swet, just to add,
yeah, please.
Leading on from what Shubhankar Rao said, direct investments looks very lucrative. But, in the past, if you see majority of the funds that were based in India are now not existent because, not everyone understands the landscape so well. So a lot of people who are eyeing investment into India are preferring the fund route.
Fund route.
So, and with Gift City, the avenues have only increased for investors. And, it also allows leveraging, it also allows hedging. So, a lot of things which the investors were not able to do 3-4 years ago is now possible.
Okay, we'll let the lady also speak. These two gentlemen are pushing for India growth story. You have to do your bit and push for UAE and Dubai growth story. See, when there is sorry, go ahead.
Absolutely, yes.
Yeah. Also, when there is development in housing and commercial and growth development, and there is bound to sort of development happen in warehousing and industrial also, because it kind of fuels each other and the whole ecosystem works like that. You operate in that space. What is your experience? What kind of demand are you seeing? What kind of projects are you making? And how are you collaborating? Are you collaborating with investors here globally? What is your sense on that, and where is it headed?
Sure, absolutely. So, as the managing director and partner in Palmon Group, we have an asset management company that manages about 30 assets for GFH Mandre REIT that is into logistics and warehousing. We also develop. We've recently completed a chemical warehouse that has been specifically designed to specialization and automation has been the key in that warehouse. And of course, there's a huge demand because of China hasn't performed in 5 years. So a lot of the wealth, I want to say, wants to be deployed in a country like UAE, which everybody has been watching since years, and it has slowly really gained a lot of investor confidence.
Okay.
And it's very important, and that element is very important, because if they have worked on their foundation to gain these investors, those have come in today. And of course, there are drivers like world-class infrastructure. They are always ahead of the game for their infrastructure. The Etihad rail coming up, which will connect 11 cities, which again is freight and passenger driven. So everything that they do builds investor confidence, and hence, not only the money, but people are also moving. There were about 35,000 families that moved into UAE last year. This 2025. So all this creates the ecosystem. The online penetration is still lower compared to other large countries. That again needs more warehousing. So the last mile logistics and fulfillment can happen. So there are several factors, the tax advantage is still there. Like I know people moving from Canada and lots of other places in the world because they have paid previously, but they don't want to pay anymore. They want to be in a tax-free zone where they can enjoy, they can safely live, because safety has become an issue in many, or in fact most countries nowadays. So they want to come in with their children for safety. So there are several factors that UAE has been already considering, and how to enhance the quality of life here of their people, residents, the golden visa. They have so many amazing cards that they have played out along these years, that this has all built investor confidence. And like I tell all my colleagues in the government departments that I think Indians are the heart of UAE. And of course, UAE is our heart as well. So of course, it goes hand in hand, where else Emaar and everybody invests in India as well.
Correct.
But Indians have especially huge confidence in living, investing, doing business. The ease of doing business in UAE is far beyond, like it's unmatched to any other country as well. So there are several factors that make UAE very, very lucrative and inviting for investors to be here.
Just one more question, because what we see in India, if you have to build warehouses, you need large land parcels. And, that's always a challenge. Like you were saying that, aggregating title and all of those issues are a real challenge. Do you face that here? And what kind of work are you doing on that space? I mean, is that as a company, you are taking care of that on your own, or you have sort of, delegated it to... so tell me a little bit about the challenges that you face, especially on land aggregation part.
So yes, of course, land is limited. UAE is a small country, and we all know that. Having said that, we have started building vertical, right? Vertical warehousing is the new thing. It is what warehousing is supposed to be now. So we have, in fact...
Less land, more space.
Yes. So we also optimize costs in that way. So we are building about 24 meters now, where previously there were 8 and 12 meters only. So we are doubling it now. So we have just broken ground in September for a huge 24 height warehouse in Jabal Ali Free Zone that gives the investor, the tenants, the businesses much more for their value.
Okay.
Also, offices are only 3% of the warehouse, whereas offices were previously supposed to be more. So that again saves a lot of cost. It gives them the best buck for their investment. So in return for the investment. So it's all working. And the UAE, I believe the UAE government, DP World, Javza, they are very forward thinking. They're very future focused. UAE in general is very future focused, and that is one of their biggest strengths. And that helps investors get a better value for their money, residents, business owners, always have a win. They have the strategy of win-win, which plays out amazingly, and again keeps the investor confidence in.
Sure. Scarcity also gives you the chance to innovate. So in that sense, yeah.
Absolutely.
Manish, I'll come back to you and try and understand, like you mentioned in your last response, that you've been sort of raising capital from this geography for a really long time. Can you take us through the nuances of conversations you have had with investors and LPs here, let's say 5 years ago, and what is it now? Because every 5 years the image and the whole situation of a country changes, the GDP, the development, everything. Can you take us through the nuances? What were their concerns earlier? What are their concerns now? And also for us, can you chart for the audience the difference in returns? For example, let's say a LP sitting here might say that my country itself gives me so much of capital appreciation on real estate. Why would I put in India, for example? Can you differentiate that for investors and people in general? Because to a layman, it looks very sort of interesting and attractive. So just nuances of the conversation and returns profile.
Also, just maybe he can add to So from the very start, we've been skeptical about investing in India because of the currency devaluation. That's one of the biggest risks for us to send money and money to India. Whereas if anything related to dollars, it's pegged. So you can maybe address that as well.
So maybe I'll start in the reverse order.
Yeah, okay,
because,
please. Go ahead.
Currency is something that keeps coming up in all our discussions.
Sure.
Just to give you one data point, our investors from UAE, they first invested in our fund in 2016, and they continue to invest with us. So I think, if you look at investment in India from a longer term perspective, then I think the currency devaluation is not significant. What happens is there are blips. So for example, if you were to invest in 2024 and exit in 2025, that 1 year itself, you will face a significant blip and significant hit on your returns. But if you have a 10-year horizon or a 12-year horizon, then over that time period, the devaluation is around 2.5%. And not significant. And now also, because of Gift City, hedging solutions are available through which you can hedge your returns. Obviously there is a cost attached to it, which is again linked to how the currency fluctuates, but that hit can be minimized. And now some of our investors feel that in the longer term, because of what is happening globally, the reverse may also play true. So, what they do is, their investments are happening in such a manner that at any given point of time, there are returns that they're getting from India and there is new money that they're putting into India. So, it acts as an automatic hedge. So net, the point is if you have a longer term horizon, then I think currency risk should be okay. But obviously in a shorter term or time period, there may be ups and downs. So that is like the first response. And
it's a 3-part question.
Yeah, so in terms of the kind of conversations that we've been having, see in so 5 years ago, let's say before COVID, immediately before COVID, like 2018-19, the real estate scenario in India was in a flux because, projects were delayed. No project delivery was happening on time. Approvals were also, not a lot of people understood what kind of approvals are required where. So, the projects were moving at its own pace. And,
so how do you convince investors in that situation, right? They'll keep coming back to you with questions.
Correct,
Please
correct.
go ahead, yeah.
So, but it's changing now and it's changed significantly, especially after, RERA has been introduced. Now, you cannot launch a project till the time you have all approvals, which was very different, 7-8 years ago where, just because you have a piece of land, you would launch and you would sell. And, then you would not have money, you would not be able to complete the project. All those risks were there, which are now non-existent. Because until you have all approvals, you cannot launch.
Okay.
So, that gives a lot of confidence. Second is, 10 years ago, a lot of individual managers were there. Now it's become an institutional play. So like, for example, if you look at India, they are only in the residential real estate side, there are 5 or 6 large managers who are managing most of the money. They'll have like 85-90% of the market. So, when you have an institutional play, then you have a better understanding of regulatory regime. you have better understanding of the market, you have better understanding of the developers. So, when you have that level of understanding, then you can convince the investors that, we know the market really well. This is how the market has evolved. And this is how managers have evolved. And we understand the risks and what are the mitigation that we need to do to plug the risk that we can identify. So when you have that kind of a conversation, then I think the LPs, start believing in the story. Now, how the nature of conversation is changing is that, earlier we had to first sell India, and then we had to sell real estate, and then we had to sell HDFC Capital.
Okay.
Now we don't have to sell any of that because India's story is very intact. We have a stable government, and the policies are now coming into fruition, infrastructure developing at the best speed that is possible, right? I mean, I don't think, there's any gap in that. And there are changes in regulatory regime on the real estate side also, which is helping the sector. And on the manager and, regulatory regime with respect to investments are also, pretty much in place. Now it's more about how the investor wants to diversify their portfolio, right? Now, there are different kind of exposures that the investors may want to take. They may want to participate in some portion of their portfolio in debt and some portion in equity. Now, if you have to park your money in debt, then I think a product like ours makes perfect sense because anything that we do is fully secured at all times. And our returns are, pretty attractive given the risk return or risk reward ratio. And all investments are secured. So, those checks and balances are put in place. So now the conversations are really about how much of an exposure that the investors want on the debt side in India.
Okay.
That's how we start. Because now India and real estate and HDFC, we don't really need to sell. It's more about the investor now.
Sure, understood. Mr. Rao, like you mentioned, you have projects here and India, and everything looks, from this conversation and generally also when we sort of, read news stuff, everything looks good, fine, rosy. But tell me the challenges, tell me the red flags that you have here as well as back in the country in terms of the challenges that you face in development of projects. It's not a very nice question to address, but good to hear some thoughts on the challenges as well.
The challenges really, say for example...
For both the countries.
Challenges really, say for example for India, it's more in the permissioning process.
Okay.
There is a rigmarole that you have to go through and numerous bodies involved. And say for example, we're introducing these beach lagoon communities in India. The first thing that comes to mind from everyone is, water is a problem. Really? Water is not a problem. We're doing the same beach lagoon communities here in Dubai, where it's a lot more hotter. Say, for example, in India, every state in India has enough rainwater. Rainwater harvesting has to happen as part of the first project. And most of the projects that we're doing, we're trying to make them sustainable. So if you're trying to achieve net zero, if not net zero in everything, net zero in water for sure, rainwater harvesting, aquifer recharging, all these are basic core aspects that everyone who is investing into land should also do. Sustainability today is not just to get funding or not just a branded initiative. You should have it as the core of your investment mindset. As an LP, as a GP, when I'm investing into a project involving land, I should also ask for sustainability initiatives being at the core, even if it is not a ESG funded program. With that said, what do we see in UAE? UAE, it's fairly, the permissioning process is easier. Obviously, for say our projects in particular, all these projects involving a crystal lagoon has to go through the thought process of large water bodies. Say for example, District 1 has a 100 acre plus lagoon. So this is a large water body in the desert, you have sandstorms, all of those that you have to deal with, and yet it is very successfully operating here. So to answer your question, India definitely has some regulatory hiccups, but I think it's all a matter of with RERA coming in, it has become very easy for us to, as builders, as developers, ensure everything is up and up before the investment comes in and investors are safe. So India definitely, particularly land-based investments in India, today are a very safe investment for a lot of the LPs, GPs from UAE coming in. And it's also giving very high returns. India economy today almost being driven towards $1 trillion real estate economy. And by in the next decade or two, heading towards $6 trillion is the goal. That Viksit Bharat 2047 time, the projections are that in a $30 trillion Indian economy, $6 trillion are going to come from real estate. And this means significant growth, double-digit percentage growth, literally real estate driving the economy. If one sector can drive 15 to 20% of the growth in India, that's real estate.
Sure.
UAE has already seen that. So there are numerous growth initiatives from real estate in India and UAE. So we're really getting past these small hiccups in the process and bulldozing this growth momentum.
Sure, understood. Meher, on the warehousing part, we were talking about the difference in how UAE has shaped up and India is shaping up. There are challenges there are challenges here. It seems less challenges here from the conversation we are having. But warehousing as a segment has attracted a lot of capital in India and in that geography, and that's driving growth like anything, and it's spreading not only in top cities but to smaller cities and it's wide in that sense, and the reasons are obvious. Obviously the growth we have seen in e-commerce, quick business, and just the data penetration. Everybody has a sort of mobile connection and all of those things. Is there a similar story sort of playing out here as well in terms of attracting capital? Because the Blackstones and the Brookfields of the world are betting big. They have bet big on that segment, and that story has played out really well in India. What is the, if you can draw parallels, if that is possible, is it a hotspot of investment?
Absolutely it is. So like I said that, the online penetration in UAE is still very low.
Okay.
I think it's only about 13%. A few years ago it was 8%. So people are still driven to the mall culture, and they go out, they shop, they eat, and it's like a full day activity. But besides that, more and more people are changing their patterns to going for more entertainment rather than shopping. So the shopping area still has to basically go online. So hence the online penetration will further boom the warehousing and the logistics sector in UAE. The track record, as a REIT, we have given also a track record, and we are one of the highest performing REITs in the GCC. So there is a track record which has also attracted the Brookfields and the KKRs and a lot of the people from the world, because they know if they invest their investors' funds in Dubai, they will get a sure shot return, because the track record says it all. And besides that, again, I think it's the vision that UAE holds, which is Vision 2030, Vision 2040, and it's clearly communicated. So it's also a mindset that people are getting attracted to. They have built the foundation, which they have communicated. They have proven track record of UAE success. And now people are super comfortable to come here, invest, and not only invest, but also come and move their families and stay here to benefit from, again, tax and better standard of living, a very high quality of life. So I think that what drives, again,
the
warehousing.
growth.
So it's a whole circle.
It's a cycle,
It's a cycle
one
and
leads
a
to
circle
another.
that-
Correct.
So I feel that, and regulations, and they are very much, I want to say the infrastructure and everything, the innovation, they are forward in that. And that's what I think the newer generation loves. They want to be like, there are parents who want their children to come back here and work, and they have been successful because they're happy being in this environment because of the innovation, the drive, the tech, the AI, you name it, and UAE is on top of their game. They are so on top of their game. and that attracts, again, safety, security, confidence. People want to build their life here.
Sure.
And like he rightly said, it is magical.
It is magical, yeah. Land as a magnet, aptly named. Just last question for all of you. If you had to make one bold prediction for real estate for you, it's India, for you both, India and UAE, and for you, obviously, UAE. Make one bold prediction for the real estate market of each of your target geographies.
So a lot of the people are skeptical that the rates will freeze, the growth will freeze in UAE because it's long overdue. But I predict...
But have we peaked already, or we are...
No, because of the Saudi rent freeze, we haven't peaked. I believe people who have not taken an opportunity and have not ride the wave yet that they say, there's still 5 years to go. You can still invest and get a great return for the next 5 years. Yes.
Okay, for you, sir.
10,000, I would call it HNWIs from across the world. With 10,000 millionaire HNWIs across the world will relocate to UAE, investing into real estate. I'm hoping 100,000 HNWIs from across the globe will invest into India. If we tweak a bit, maybe we should also adapt I would call it the 10-year golden visa that UAE has done. And I'm currently working with the Ministry of External Affairs, all of you willing, God willing. We should do that from India as well. And I'm sure 100,000 millionaires from across the world would want to be a part of the India growth story as well. So betting big on both.
Yeah. So for the UAE, I think I have the number, 9,800 new millionaires. UAE is expected to host 9,800 new millionaires in 2025, which is a huge number.
And by 2040, they want to make the population 15 million.
Okay.
And today, I think it stands at 5. So, yes.
Okay. Yeah, go ahead and make your bold predictions, so to speak.
So, it's an evolving market in India, right? Like if you look at the last 20 years, every 5 years, the top 10 developers change.
Correct.
15 years ago, the top 5 were different. 10 years ago, top 5 were different. So hopefully, the change will, slow down because the large developers will, be stronger. And we feel that, right now with about 600,000 units per annum on the housing side, it's just barely scratching the surface. We think that 5 years down the line, this number will easily cross 30 lakh, or let's say, 3 million houses per annum.
Okay, great. And also somehow we see the share of, the smaller developers is somehow kind of, increasing, because earlier they are doing good work, and, the regional players are coming up as strong players and giving good competition to the bigger ones also. So it's all kind of, democratic in that sense.
Yes, of course. In fact, what happens is in times of boom, large developers sometimes tend to get overexcited and, they leverage more than what they should.
Yeah.
And, if the market, it's ultimately a cycle play, right? And then if the cycle doesn't play out because of the leverage, they can face issues. Whereas I think now the smaller developers, they realize that, they are small and they have to take baby steps.
Sure.
So, they do smaller projects, they complete it on time, they build customer confidence, and that's how they grow. So, we feel that over the next 10 years, the pie of, the smaller developers also going to increase compared to, the larger developers.
Sure, understood. I think we should leave it here. We're short on time now. So thank you so much, and a big round of applause for our speakers, and thanks for being a patient audience. It was a lovely discussion. Thank you, everyone.
Thank you, Sweth, and thank you to our panelists. An incredible discussion, I must admit. I'm going to request you all to come together for a group photograph. Well, considering that we will now be stepping into a networking break, I'm also going to urge you all to please connect with our speakers to take your discussions forward as well. So please don't forget to do that. And do connect with our speakers. Let's take those conversations forward. And at the same time, while the scheduled break is for 15 minutes, we'll see you all back inside the hall in 15 minutes for our next set of sessions. Do not forget to visit the partner booths. Also get a chance chance to take a look at their exciting initiatives, all that and more. Enjoy the high tea, enjoy the conversations. See you all back in 15 minutes. Thank you. All right, ladies and gentlemen, our next session is about to begin. I'd like to request everyone in the pre-function area, all those who are enjoying those discussions, I'm going to urge you all to please come inside the hall and take your seats. We're about to get started with our next session. And let's do that. Let's actually deep dive into our next fireside chat, which is all about the fixed income playbook with private credit. That's going to be the underlying theme of our next session. I'd like to request everyone, grab a cup of tea and coffee and come right inside. We can bring that cup of tea and coffee as well with us, but do come back in and let's deep dive into our next discussion. Thank you. Ladies and gentlemen, everyone in the pre-function area, let's have you all come back right in. Time to get started with our next set of sessions. More insights coming in. We'll keep those conversations flowing in with a lot of data points as well that are being driven by the discussions. I'd like to urge all of you to very quickly please take your seats. Our next session is about to begin. Thank you. All right, so that's a cue for us all to get started as well with our next session. For all those inside the hall, thank you so much for your patience and most importantly for being with us here, not just on time but in time. But that being said, within a minute, we're about to get started with our next fireside chat. For all those, again, outside in the pre-function area, grab your cup of tea and coffee and come back right in. We're about to get started. Thank you. All right. Welcome back. I do hope you managed to grab a refreshing cup of tea, coffee. But that being said, we'll also go ahead and let's get our next session started, even as our colleagues and our fellow delegates get to join us in the next couple of seconds or minutes. The next session, in fact, is all about the fixed income playbook with private credit. That's the underlying theme. Because we all do understand that the Gulf's fixed income scene is waking up fast, shaped by global shocks, or for that matter, shifting geopolitics and new monetary realities. But with stronger credit rules and modern bankruptcy laws, the GCC and Egypt, all of these are suddenly looking irresistible to the LPs. So that being said, as the momentum builds, the Indian private credit boom offers a playbook that the Gulf can borrow and can also turbocharge. So what we're going to do is, it's a feisty topic, we realized, which is why we decided we'll have it as a fireside chat. And this chat will again be spearheaded by Swet Sarika, who will join us in the next 1 minute. So I'd like to set the tone, but get all of you seated as well. And Swet Sarika, the assistant editor, VCCircle, will be driving this discussion for us all in the next 1 minute. For all those who've just entered inside the hall, you can please take your seats. We'd like to also honor your time and get the session started. But meanwhile, we're also going to be joined by another very incredible speaker joining us to share thoughts around this very, very pertinent theme that we are all eagerly looking forward to. Now, the entire day, we will be focusing on driving discussions in the form of panel discussions, or for that matter, in the form of presentations, but that will continue till about 3 or 4 p.m. So we'll get to have an understanding across these diverse insights flowing in from this side of the hall. So we'll hold on to that momentum and hold on to that energy. Well, that being said, I can see Swet already walking up. So Swet, let me first invite you, but joining us this afternoon, we have with us Sharaf, who's the fund head, Amplify Growth. So let's also amplify those discussions for us all. Let's get to understand more. Thank you so much, sir, for joining us. And Swet, without any delay, I can see a bit of that applause coming in there. If you're all induced with a lot of tea and coffee and caffeine in our systems, can we have an energetic round of applause? I would love to hear some sound of applause here. We love that. And Swet, that's a cue for you to get started. Over to you.
Thank you so much. I'll let him have some water before we start. Okay, we can get started. The topic, as you know, is fixed income playbook with private credit. As we understand, it's an asset class as an instrument. It's kind of fairly new in the geography, and it's taking shape, and it's kind of growing from strength to strength. What is your thought on that in terms of, how is it growing, and, is it taking shape? What is the participation of investors in this asset class? If you can share some thoughts on that.
Sure. Let me just give you a little bit of background. So Amplify Partners is a credit fund focused on technology-driven businesses in the region. And we provide it to companies in the kind of A, B series stage, focused on the GCC.
If I can request you
UAE and KSA. Just in terms of how the market has grown, I came to the region in 2008, and we launched the first kind of private credit fund in the region. So I can talk about it from a personal perspective and from obviously the kind of stats and numbers perspective. When we first came to the region in 2008, it was the first credit fund. And we were doing deals across the region. The regulations were very different back then. The bankruptcy processes were very different. There was no kind of regime across the entire spectrum to kind of facilitate credit. Now, it's very different, right? Very different. You have credit regimes in the DIFC and ADGM. You have bankruptcy laws. You have ability to take more security. There are all kinds of things that you can do now, and that's been one of the drivers.
Okay. But, what is the journey like? You mentioned the system and regulation was very different. But in these years, what all changes have you seen, and how is that sort of, fueling growth for this asset class, so to speak?
Yeah. So right now, I think, the entire private credit market in the GCC is about $5 billion.
Okay.
Which is only about 1 to 2% of the entire kind of capital stock on the debt side, which includes bank financing and then sukuks. This is expected to, double over the next 5 years, so to 10 billion, which is still pretty small, right? It's not huge,
Yeah.
right? I mean, there's funds in the U.S. and Europe that are that size. The evolution has been tremendous, especially since about, when Saudi really opened up, following Dubai's kind of, bankruptcy processes, ability to take security, DIFC and ADGM creating a regime where people can come into the region. Part of the impetus to create these regimes was because credit funds from the US and Europe wanted to set up in the region and came and looked at the regulators and said, we want to set up a credit fund in the region, but we have no regulatory cover to lend.
Okay.
Technically, right? We have no regulatory cover to lend. Meanwhile, there were other local credit funds just doing it. We were one of them. But now they've set up these regimes and people can lend. I think one of the things that would be very beneficial is to create a blanket regime across the GCC.
Okay.
So that you can set up one credit fund and lend across the regions. Now, people are doing this, right? There's credit funds here that are doing deals in Saudi Arabia, Oman, Kuwait. But I think it would help, right? I think a cross-regulatory, kind of EC type, EU type regulatory infrastructure would really help things, right? I've spoken to regulators about this and said, for equity, it's very simple to invest across regions, right? You just go and invest. Nobody thinks about what the security is for each deal. What is the withholding taxes for each country?
Sure.
All of that. So if you could streamline that, I think that would really help things. But it's come a tremendous way. It's really come a tremendous way. There's a lot of credit funds coming to the region. I do think ultimately there will be more. There aren't as many deals as one thinks. There aren't gigantic deals. There are some deals. These get trumpeted a lot. But I think the deals will be on the smaller side and remain so. Unless you're in infrastructure and doing very large transactions, of which there aren't that many, I think the deals will be on the smaller side.
Okay, but do you
relative to US and Europe?
Okay.
Yeah.
So you're comparing it with developed economies, obviously, which are more mature in terms of different asset classes, particularly this one. Do you think that the deal sizes will sort of go up with time as more capital? There are more backers. For example, local family offices, they can put their capital to use in this asset class. What's your sort of thought process there? Do you think you will have mega deals in this space also, and it will work in tandem with, let's say, private equity or banking, because these are not like different aspects of the financing ecosystem. They work in tandem, right? Where you can get funding from banking. If that is not available, sometimes you go to private equity. If that is not available, then private credit. So everything works in tandem. So do you think the deal sizes will go up as the market matures from here on?
I think they'll go up, yes, but I don't think they're going to get as big as some potential supply hopes, right? Some very big credit funds will be hunting for a long time for the mega type opportunities, right? But I think if you size right for the region and don't think you can come in with a gigantic mega fund and deploy it quickly and within a reasonable pace of deployment, then you'll be okay. Right?
But why do you say so? Because it's a place that has a lot of developments. I mean, infrastructure.
It's just population, right? I mean, you just look at the numbers. U.S. is 350 million. Europe is, about the same.
Mm-hmm.
The GCC is nowhere near that.
Okay, but there are segments which are capital intensive, right? You know, real estate, for example, let's say infrastructure, whether small or big country, doesn't matter. The segment itself is very capital intensive in that sense.
But the infra's got to be built for the population size, right?
Okay, I understood.
I think there's a market, don't get me wrong. I just don't think it's going to be as big as some potential people think, right?
Okay.
It is growing. It's growing tremendously, but it's coming off a very small base. Right?
Sure.
5 billion, 6 billion private credit. It'll grow, but you just have to find the right niche, find what you want to do, and focus on that. There are some large infrastructure deals, but they're not going to be as big as those in China or some big deals across Europe or even the US.
Sure, understood.
But don't get me wrong, it's a growing
on the
asset
numbers,
class.
it's roughly 5 billion today, but expected to go to 20 billion in 5-6 years from here. Do you think that that's a possible, achievable number?
20 seems ambitious just on a kind of CAGR growth analysis. That's a 4x in 5 years. But it is growing rapidly. I think it could double by then, maybe even a little more.
Okay. Which are the sectors, if you could give us some sense, you know, there are a lot of small entrepreneurs, you know, MSMEs, you know, the tiny, you know, companies which kind of, you know, tap into different pools of capital. Which are the sectors which are kind of, you know, tapping into this ecosystem a lot and are benefiting from this asset class, so to speak?
Well, I think that from the demand side, there's obviously, you know, the 2030 vision both in KSA and UAE. This is on kind of industrial, right? There's a lot of industrial groups that are looking for capital, and this is capital intensive and needs quite a bit of debt. There's also social infra, where you're looking at schools, hospitals, roads, things like that. Part of it could be a PPP. These are kind of more project finance, but debt ultimately. And then you've got just the kind of basic SMEs, right, that have a hard time finding debt capital, oftentimes need something bespoke, need something where a fund has the wherewithal to look at this, whereas banks are just designed to do larger deals. And then obviously some of on the tech side, right, we're seeing quite a bit of demand on the tech side for credit, right, asset-backed, receivables financing, as well as just general corporate for some of these larger tech-driven businesses that have achieved scale and are looking for less dilutive capital.
Sure, understood. But that is on the demand side. From a supply perspective, what do you think? Family offices are pitching in, global funds are pitching in, local, you know, mid-size, small-size private credit funds are pitching in. What is the ecosystem like? Who are the larger participants from a supply point of view?
So there's a few credit funds kind of being launched and deploying across the KSA and UAE. Some of them are backed by big asset managers who are typically private equity focused or VC focused. There's funds that have come in from India as well. Stride Ventures is here, doing transactions in the region, oftentimes for Indian-backed founders and businesses. Their family offices to set up a team to kind of do credit directly is a special skill set. I have not seen them do that. They might do it on real estate because they know the asset class well.
Yeah.
But to set up a dedicated team to do kind of lending, I haven't seen that. And there are some, you know, foreign funds that are looking to do specialized deals. So, for example, I think on the, which deal was it? It was called Francisco Partners. Took out, exited a number of VC players for, I think it was Property Finder.
Okay.
Very large transaction, out of nowhere, $150 million deal to take out some of the early investors. So there are pockets here and there. But I think it's going to be mainly local funds or funds that are coming, setting up here that are been doing infra in Asia and want to be in the region now or things like that. That's where I see most of the kind of supply side coming from.
Sure, understood. I also wanted to understand a little bit on, you know, if you can look at larger economies and see and want to draw parallels or maybe draw lessons from those economies from, you know, what they have done with private credit. I know the geography is different, the population demography is different, but just, you know, which country, which economies have done it really well and, you know, sort of have set an example for this financing ecosystem.
So just as background, Europe, for example, is a bank finance market. Typically, historically, banks have done most of the financing. Whereas in the US, it was, ultimately became a disintermediated market where you had a lot of kind of private capital, private debt running around. There were a lot of bond issuances to fill that gap. Now in Europe, private credit has grown significantly because of regulations from Basel II and III and IV. And that's made bank lending very restricted and very tough to do. And it's affected globally. It's all banks are affected by this regulation. And that has really put a damper on bank lending. Not that they were, super eager to lend to some of these transactions originally, but now it's created a real gap in the market. Banks still remain the primary player for debt capital in Europe, but it's shrunk. And I think it'll follow that model in the region, but I do think it'll potentially leapfrog because there's so much appetite for debt capital. It's under-levered, it's underserved. There are all kinds of different niches and pockets for different types of funds to play a role across the debt capital spectrum. Importantly, the governments want this to happen, right? This is foreign direct investment in a sense. It's foreign money coming in. It's helping develop the region. It's debt capital, so there's no ownership there, and it helps all the regional players grow and develop. So I think the governments are very behind it. Thus, the kind of drivers behind the regulators to kind of implement better security procedures, bankruptcy laws, all of these type of things that didn't exist just 5, 6, 7 years ago. I think it'll take time because until you have a court systems that have shown that they have a predictability to a bankruptcy process, all of those type of things. The UK has been hundreds of years, US, decades, if not centuries. Here in the region, it's still young, and you need more predictability for that. But I think people are willing to take the risk now. They've seen that the laws are in place. They've seen a couple of processes happen. They can look at it, dissect it, analyze it. And so I think, time is on the side of the region, right? People are willing to take that bet. And that's why a lot of these big institutional funds are here now looking at transactions and assessing the market.
Mm-hmm. So also, there is a great connection between, you mentioned briefly about tightening of lending regulation. And, typically when that happens, private credit sort of, goes up because then you have less capital flow from traditional financing ecosystem. When did all this start in this geography? You mentioned about 5-6 years ago, it was not there, and the bankruptcy and all of that scenario is kind of shaping up and getting more clarity. This is the journey that it has taken, or it's way behind that?
Well, I think Basel was there a while ago. But then I think what happened was slowly but surely things improved, right? So they put in these regulations for bankruptcy. They put in all kinds of ability to kind of do a credit fund. And the region has really improved, right, in terms of just the geopolitical aspect, right? It's a diversified economy. People feel comfortable. People are moving here, living here, setting up their lives. And then bit by bit, all the pieces were put into place. And so Basel was always there. There was always restrictions on bank lending, and it became difficult. But people saw a gap in the market, right? And people came to the region and started doing things, and assessed the region and said, "This is a great space to be." And then on the other hand, a lot of on a relative basis, a lot of other regions don't look that great, right? So if you're sitting in Europe saying, "Okay, well, the economy's super slow. There isn't that demand. It's a red ocean environment whereby." I'm just not making the yields I could be making. I'm just a commodity, et cetera, et cetera. Let me look around. Where could I be? Where could I grow? And this region looks pretty interesting. Okay, it's not a gigantic market, but it's someplace I can do some deals and maybe make some alpha on my debt product.
Sure. And also, as a fund manager, what is your most pressing concern from when it comes to this asset class? A lot it's kind of shaping up and doing really well. But if you have to put in request for to the government or maybe to the regulatory body to further smoothen the process so that it's easier to disburse capital because when it comes to small entrepreneurs and medium and small sized companies, somehow you have to look at their parameters strongly because the default rates are slightly higher compared to bigger companies and all of those things. But are there concerns that you guys are dealing with when it comes to regulation and just the framework of this ecosystem?
Well, I wish I had influence with the regulators, but I don't. I would say that the best thing that they could do and focus on is a framework across the region.
Okay.
Right? To make the license for lending easier.
When you say the region, I mean, if you can specify what all areas.
The GCC, right? So if you could have one blanket credit fund license across the region, that would be ideal. Like I mentioned earlier, a PE fund doesn't need that at all. You're just investing equity. There's no license required for that unless it's a sensitive sector. And then speed of being able to enforce on security. Right? I think having that ability to do that very quickly, as in the U.S. right, and in Northern Europe. So even Southern Europe is probably on par with the region, and probably the region is even faster in some places. So it's not bad. Can always be better, but it's not bad. But I think that would give investors and allocators a lot of comfort when they lend or invest into companies that do that lending.
So right now you are saying, there are specific regulations for each of these geography within GCC, right? You can't have like one fund for the whole region.
Legally, you have a credit fund license for the UAE. You get a credit fund license in Saudi.
Okay.
Now, technically, people are lending across, but if you want to be very, very
you can have a global private equity fund and invest anywhere.
Yeah.
So that kind of ecosystem. Yeah, why not? Definitely. Maybe because somehow lending is more regulated.
For some people look at it, I'm not sure why, but there's some kind of stigma with, okay, we have another lender. I mean, as a foreign credit fund, try lending into India. It's just almost impossible, right? So there is some, the banks protect their markets. And even here, sometimes, for example, taking security in the region, you need a bank to take certain security, which adds cost and expense and hassle, and negotiating with a third party, because you can't take onshore security without a bank as a security agent. Why? I mean, that's just annoying, right? So that creates friction for transactions. That's just one example.
Sure, understood. You mentioned India. What is your thought on India credit ecosystem? Because all the PE giants who started with private equity, they have all set up private credit sort of platforms and big ones, and lending left, right, and center. Correct. So we have seen that play out. What are your thoughts there? Do you think it's a mature credit market from that point of view?
I think the Indian credit market is almost a pioneer in some sense. We've talked to the guys at Stride Ventures here in the region. We've learned from them. We've also looked at deals together. I think that if you're in the country onshore and you kind of know what you're doing, there's a lot to do, right? There's a lot to do, and because it's one country, one uniform kind of security regime. It's templated out. Everybody knows what they're doing. It works very well, right? From the outside, it's very difficult to do, right? You don't have foreign funds, credit funds lending into India. And even I think on the equity side, you should be either Mauritius or onshore. It's difficult just to do it from the outside because of tax and other issues.
Sure. Like I asked my last speakers, if you can make one bold sort of prediction for this ecosystem for UAE and the GCC market, what would that prediction be?
I think it's going to be a fast-growing asset class. Nothing spectacular in terms of a 4x over 5 years, but I think it is growing. The yields are good. The region is good. The stability is good. And because the region has become much more diversified, in terms of oil prices and geopolitical risk is diminished, people are looking at the region. So I think it's just going to be steady as she goes. But I do think it's a fast-growing asset class and demanded by investors.
Demand is there very much.
Yeah, it's high yielding.
Okay.
You know, it's historically pretty secure in terms of defaults and recovery rates, yielding, contractual returns. You know, the difference between the private equity and VC and credit, you know, I've worked at private equity and I've worked in credit. You don't see many monster PE funds in the region. Why? Because the exits are few and far between, right? And even on the VC side, there are gaps in the Series B, Series D, things like that. So there's very few graduation rates. So PE funds haven't done great in the region. But on the credit side, because it's contractual, because you're coming in as a third party, you're not partnering up as an equity partner with some of these family groups who really don't want a true equity partner. They're looking for capital, someone to talk to, someone to, you know, bounce ideas off, but they don't want someone on their cap table. Obviously, with the younger founders, that's a different story. So credit fits the region pretty well in that sense, right? And it can be structured different ways, so it acts more like equity, acts more like debt. But that's part of the reason why it succeeded. And you'll see the same thing in Asia as well, right? And I'm talking, you know, China, Malaysia, Indonesia, and maybe in India as well. You know, the family groups are very careful about who comes on their cap table. So they'd rather pay for the debt. Okay, it's expensive. It's not bank debt. Maybe I need this now. But it's, you know, like we always say, look, this is, you know, private equity is a marriage. Debt is a fling, right? So that's kind of how, one of the reasons why it's been successful in the region and why credit funds are cropping up. But PE funds have not, you know, there is no monster PE fund in the region, right?
Oh, okay, interesting insight there. I think that's a wrap and we'll have to leave it here. Thank you so much for your time and thank you so much for being a wonderful audience and a big round of applause for
Thank you.
Mr. Sharaf.
Thank you very much again. And if I could request both of you to please step forward for a quick photo op. We'll just capture that as well. Meanwhile, let me inform our members of the audience that we're about to set the stage for our next discussion as well. And that is all about seeding venture ecosystems, cross-border startup opportunity. So we're going to start that up as well, but in the next couple of minutes. Please stay tuned and stay seated. We're about to set the stage for our next discussion right away. Another interesting discussion there, and with that we now march ahead because we all realize that when it comes to new age ventures in the Gulf, we know that it's exploding, powered by digitization and shifting consumer habits for that matter. And India's startup ecosystem has risen to global top 3, exploring talent or for that matter innovation at scale. So this is where we will be focusing around capital, around talent and ideas and how they're all moving faster than ever before between the two regions. So where do the LPs see the next big VC wins in the corridor? And how will the GPs expand their mandate to make India an integral part of the playbook? We'll get those answers coming from our speakers. Looks like we have set the stage a bit. And we're about to invite our speakers on stage. But let me tell you, this time we'll have Aman Malik, Senior Editor, VCCircle, who will be spearheading the panel discussion. All right, so we are in the able hands of Aman to sort of spearhead this discussion. But that being said, let's also quickly invite our speakers. However, the seating looks very one-sided, but the discussion will not. So we'll get on board our speakers really quick on stage. I'm going to get a quick cue from my team, if you're all set, after the aesthetics have been handled on stage, because they're primary as well to ensure the discussion is good. Yes, another minute. All right, we'll just take a couple of seconds. We've got some really interesting names, incredible names joining us for this discussion as well. As I'd mentioned earlier, well, we're looking at how capital, talent, or for that matter, ideas, innovation for that matter as well, how between these two regions, the pace at which it's moving ahead, which is why it's only befitting that we have this discussion right now and hear it from both ends of the spectrum. So let's do that. Aman will be spearheading the session, and let me go ahead and also invite our speakers right up on stage. All right, so with that, let me go ahead and invite our speakers. A bit of curiosity that we managed to build up there, so let's get those insights coming. First up, I'd like to please invite on stage His Excellency Maher Al-Kabi, Chairperson Al-Circle Group. Thank you so much for joining us this afternoon. I'd like to please invite you to come on the dais. I'd like to further invite Arif Mohammed Al-Alawi, Chief Executive Officer, Dubai Cultivate. And we also have with us Anirudh A. Damani, Director, Artha India Holdings. This is all about the cross-border startup opportunity. Can we also start it up with a round of applause to welcome our speakers? We managed to build that up a little, so let's now go ahead and deep dive into these very interesting insights coming your way. And I'm going to hand over the proceedings to Aman. Aman, over to you.
Thank you very much. Since we've had a longish introductory session, let's begin without much ado. I will start off with Mr. Maher Al-Kabi. We've been having a lot of very nice discussions backstage, and that sort of sets the stage up for this discussion here. Mr. Maher, you've been doing a lot of mentoring, is what one hears, for Indian businessmen who are probably looking to move, their businesses, startup founders, etc. Relocating in part to this geography here. Could you sort of, and this is under the CEPA Startup Series initiative, can you sort of talk to our audience a little bit about that and how far you've come through this process, sir?
Sure. First of all, good afternoon, ladies and gentlemen. It's a pleasure to be here. How many of you are familiar with the CEPA agreement? What does it entail? Not many. Okay, great. Just to define that, first of all, so it can set the pace in that case. Usually when you do a bilateral trade agreement within countries, it's how do you make sure the trade flows happen smoothly, but they are at very smaller pace. Those are the bilateral trade agreement. Usually bilateral trade agreement takes about a couple of years if things are okay to be signed between two countries. If futuristic, probably a year and so forth. CEPA is like comprehensive economic partnership. It's not about just trade, bilateral trade, but also investment, exchange of services, IP, many things. So we signed the CEPA agreement with India back in June 2022, and I was there in June 2023 with our ministry to go and celebrate that 1 year signing up. Now, usually when you want to sign CEPA, imagine if trade agreement takes a couple of years, the CEPA agreement will take a really long time. But because of the great leadership between both countries, the CEPA agreement was signed in a record time of 4 months. Unimaginable, particularly when thank you. This goes to the leadership, by the way, because they really made it happen. Particularly when there are 97,000 tariffs just in Indian market. And to abolish that of 98%, it's really large. We've got about 1,900 tariffs, so relatively very, very small. So the CEPA was to make sure within 5 years, we touch a trade between both of us, investment and IP, so forth, about $100 billion. In the first year itself, when we were celebrating, we crossed the $65 billion. That tells you how fast things have moved within government. And the reason we were there, apart from celebrating, we met the Minister Joyesh Payal, so I was speaking over there, is to meet the government official. How do we further permeate whatever we've agreed on the top with all the other government agencies? And I think politically on the side, we were talking with Aman on that, by the way.
Yes.
How can we get that thing happen? So what that has enabled? You probably, some of you heard about UAE India SEPA series for startups. This happened June of this year, where more than 10,000 startups, Indian startups, entrepreneurs actually applied for this, and they made their pitches across 9 cities within India. And of course, the pitches were all about for them to get to know what UAE ecosystem, startup system requires, what they are. So giving that insight to them, and also for us to learn what is really coming up from the Indian market and where we can invest in a more of conformative manner. So this is what really happened with the series. Of course, these finalists will come to UAE, will be supported over here, they'll understand the ecosystem even furthermore, and then we continue with that.
Fair enough. Mr. Arif, now let me turn to you. You know, Cultivate was created, and correct me if I'm wrong on any of this, to put, or rather pull high potential startups into Dubai. How far have you succeeded in your mission? That is question number one. And as an addendum to that, what sort, I mean, to what extent have you managed to get participation of Indian founders in your effort to sort of relocate them to Dubai, sir?
Okay, thank you. So just to give you a little bit background about why Cultivate is we can say an investment divest from Dubai SME. Dubai SME is main, we can say, support for startups in Dubai, and they support mainly from logistics and then financing part of it. When we establish Dubai Cultivate, it's basically to cater for the other side of it. It's like we want to invest also, not only support or finance companies. And investment also is not only in the local companies, but in the also foreign-owned companies in the UAE. So we started our first fund and during 2019, and we said that let's put the criteria and guidelines for the investment, because we are new and the fund is new, and we know in investment risk over risk. Basically, it's not preferred by the shareholders. So we did our first fund basically to focus on the technology as an attribute with a growth stage. So we don't invest into startups. Anything has a growth, has a revenue, and it has to be like a scalable, has to have an existence in the UAE or have a potential to grow in the UAE. So we don't take over the whole company from that jurisdiction. We ask them to basically part of the company to expand it in the region, because we want to transfer the knowledge, skills, and and the technology itself. So we did our first fund, $17.5 million, and we deployed into 6 companies. We did different rounds. We supported these companies, and some of them are 2 companies in the mobility, 2 companies in the fintech, and then we have one in a legal side and one in PropTech. So on average, we are doing very well. We can say as an average for the portfolio, our NAV is above 30%. But on project by project, some of them we have a 3x, 4x. So this is in terms of the our success for the first fund. We're creating our second fund, which will be more extended into an earlier stage, pre-revenue. So 100%, we can say 10% will be pre-revenue and 90% towards a growth stage. And we will add also additional sectors into AI-driven, agentic, health tech, and edutech. So this is from the first part of the question. Second part is so far this is part of the Dubai economy, you can say, vision that we want to add more startups into the economy. So our main objective is not only just investing and making money. The higher, we can say, aim is basically economic. We want to have more companies to contribute into the economy. So we have in 2022 we have collaborated with one of the Indian incubators called India Accelerator through the Dubai SME. So our stage comes later stage. So being programs that was mentioned by Maher, which is CERT, and also like incubators. So we come at a later stage. So these incubators and accelerator centers, they are basically deal sourcing for us, like one of the deal sourcing.
Right.
So we have one of the companies that falls within our portfolio. Basically started with the two from India and one from UAE. And we purposely invested in that company because we want something that has like an element to extend into India.
Fair enough.
So the company is basically in the UAE, and we expanded that part of that operation into India. So we are doing the SaaS.
Okay.
India, yeah.
And now let me turn to you. As someone and we were just talking backstage, about 25% of your LP base, or 20-odd% of your LP base is from this region where we are sitting. Be blunt and tell us, is it tougher to raise money from folks over here, or is it easier to raise money from folks in India?
You promised me the difficult question was going to come last.
I throw curveballs.
No, but good afternoon, everyone, and thank you so much for having me here. See, I think the Indian venture ecosystem, or even in the Indian SME ecosystem, has gone through a world of change. I think we're almost at $750 billion worth of M&A in India over the last 8 years, right? And we've broken records every year, which means there's a record amount of liquidity with Indian families. I think the number of family offices, someone was saying earlier today, went from 53 to 350.
Yes.
I think it's closer to 500.
Okay.
Which means that these family offices are now looking at investing this money back into India, right? And I think, and what we were saying earlier, when I started Fund 1 in 2019, I must have visited the US at least 4 times.
Okay.
Right? I visited this area at least 6 or 7 times, went to Europe a bunch of times. And I had, at least from the US and Europe, I had all of $1 million to show what I raised out of a $30 million fund. Now, in the last 6 months, we started Fund 2. We've already raised 70% of our capital, and 85% of that has come from India. And the check sizes have been at least 5 times larger than the last one. It just tells you the kind of confidence the Indian founders or the Indian entrepreneurs have in their own economy.
Right.
And the IRRs are compelling. Right? If you look at Indian stock markets, 16% roughly over the last 10 years.
Yes.
Right? So all of these things work in your favor. I think it's much easier, therefore, because the amount of aggression there is in the Indian founders. I was telling you earlier that if you want to raise 100 crore for your startup or for a fund, just go to Goregaon in Mumbai, go to, you can go to Delhi or you go to Calcutta.
Yes.
Just meet the top 10 family offices over there. You will have your money within the next 15 days.
Right.
That's the speed at which they're operating, right? And we've raised that capital, so I'm telling you that this is definitely happening in front of my eyes. Versus when you come to the Gulf and you come to maybe the US, multiple meetings, right? And sometimes just to get $5 million check can take 18 months. Versus, when you're an Indian founder, when you're an Indian fund manager, you don't have 18 months, right? There's a monthly cost you're paying. You just go down to these 3 areas, you get a 100 crore check, you're done.
Yes.
That's what I'm talking about. That's the speed. I think the biggest competitor, and I'll just end with this.
Of course.
To global LPs in India is the Indian LP.
Okay. Fair enough. My next question is to both Mr. Maher and Mr. Arif. And, could you sort of take turns to answer this? When it comes to Indian businesses, Indian founders, and Indian investors, do people in this part of the world, and please be blunt if you could be, do they trust Indian businesses, Indian businessmen, Indian founders enough? And is there a lack of trust that hinders fundraising from this part of the world into India, or in your case, calling Indian founders setting up shop in the Gulf region, sir? Either one of you.
I don't think it has to do with Indians starting funds over here or would like to collect funds from here. We are not transactional. We're very much based, and when you go to US and you go to Europe, it's transactional. Of course, they're also changing a bit. not because you've only raised $1 million, but they have a different mentality of going on today. So we're very much based on understanding and knowing each other. It's all about building the trust first. So it's absolutely correct. Once you cross that line, then we try to understand you, what you want to do. Like, segment, all the things will come later on. First of all, we need to establish trust between you, because a lot of people have taken GCC as a cash pot that you can come in, take cash and go out. Yeah? Yes. We've seen that happens. We've also seen a lot of businesses come in over here, they become very transient, i.e. they try to do something and then go away, and then people and family businesses lost money because of that. Despite, of course, trying the trust. So we've kind of powered up the trust to the power 2 to make sure that, we really establish the trust first. So usually the barometer is if people start inviting you to their majlises, which is their private gathering they do at their houses, that's mean you establish the trust. And now they're going to, and they're willing to introduce you to other family businesses as well, saying, look, we believe in this guy, the product they're offering, the service they're offering are very, very nice. Why didn't you look at it as well? Because we're going to be investing in them. So this is how you start with creating funds. I think that's the key thing part of it.
Fair enough.
Second, if I may add as another point, if you don't mind, is it aligned to what we want to do as a government as well? What do I mean by that? The government is transitioning from becoming a linear economy to circular economy. The government is transitioning from becoming a manual economy to digital economy. Of course, the seed of that happened 30, 40 years ago, but we're accelerating that. So we sit in a couple of committees whereby we look after these two things, and we're even training our family businesses. So what we're trying to do with the family businesses, which is led by the Ministry of Economy, how do we make sure that the next generation now, they actually adopt what the government wants to do, is coming up with businesses which is in the digital space. Yes, we've done very well in the brick and mortars kind of things, and that may want to continue, but the government want new businesses to be in thing to do with technology. And so whatever the business is coming up now, the second layer for us to check is, are you really aligned to what UAE wants to do or not? So then we go and happily look after that.
Sure. Mr. Arif, yes.
I agree with him. Trust is the most important, we can say, especially in raising capital.
Yes.
Been doing this initially, in the early days, 15 years, I've been doing placing for different banks like GFH, R Capital, Theraat Investment House, stuff. So all of these companies, basically, high net worth individuals, family offices, is a trust, basically who you are. Do they trust you? Do they trust your insights? That basically, whatever you're providing them, it's also it's appealing for them. Is it meaningful?
Yes.
Does it add value? Is it my appetite? So a lot of other areas that come with this trust that you need to build over time. So I think it's trust when we say it's
fair enough.
In an investment. Yeah.
Anirudh, how, as an Indian businessman / investor, what can folks like you do or your ilk do to actually build this level of trust so that even in your cap table, the percentage or the fraction of Gulf LPs or Gulf investors actually goes up over time, even as your investment base itself sort of also continues to balloon. Therefore, it goes up both as a factor as well as in absolute terms significantly.
That's a great question, and I think His Excellency said it best, right? That it's all about the relationship in this part of the world. What we are attempting to do now, like we have a space tech company called Agnikul. It's the world's first 3D printed rocket engine company. It's actually launched. It's the only company to have vertically launched its rocket globally, and they did that last year. One of the companies they're working with over here is Space 42. Right, and because Agnikul's mission is to launch a rocket from anytime, anywhere. And some of the most exotic and best places to launch are in the GCC, because you have no landmass. If you look at the sea below you, there's no major landmass until the rocket goes suborbital. So we are trying. Now, the challenge is that, when you come to the Gulf, and like you correctly said, sir, that we don't know who to talk to, right? And this is a project supported by InSpace, project supported by ISRO. They are the only company in India to have their private launch pad. And their launch pad is created in a way you can pack that up into a truck and reconstruct it anywhere else in the world. So you can launch on water. They're also recovering the rocket, the world's second company to do it. There's a lot of engineering there, and these guys are extremely, I mean, they have Asia's largest 3D printer. It can print a 1 meter long engine without any manual support. We really want them to come to the Gulf, because I think this is exactly where, these are the governments that also want access to space. We're all reliant globally either on SpaceX, where 90% of their capacity goes to Starlink, or ISRO, or China, Russia. But China, Russia, probably not the sometimes you have challenges with such partners, right? Agnikul is the only company that lets you have your own rocket, and you can launch your own satellite. Nobody else needs to go along with you. That's the kind of partnerships we want. These are high engineering companies. Yes. Have we done SaaS? We've done lots of SaaS. A bunch of our companies work with ADCB, EDB as their SaaS partners. We have applied AI, agentic AI companies working here. But I think the real place where, sir, this is going to work is going to be semiconductors, is going to be space tech companies. Indian space tech is exploding at the moment. We just invested in a company building data centers in space. And 5 years ago, we did in India, it was, when I invested in Agnikul, my LPs were asking me in India to launch a Diwali rocket, people start fighting over it. And you're investing in a launch company, but look at it where it is today, right? And I think there is that level of connection that could happen in higher engineering stuff, and not just, hey, let's export Indian snacks over here, or let's just do SaaS. We can do a lot more within these two countries. I think we just need to find the right platforms to communicate and to take Indian space tech, Indian deep tech global. And it's happening right now in front of you.
Okay, my next question is again to the two gentlemen, Mr. Mahir and Mr. Arif. What can the governments of both India as well as the UAE or the Gulf region in particular, and I mean the UAE or the 2 or 3 big emirates within the UAE, Dubai, Abu Dhabi, etc., but also governments of Qatar, Bahrain, which is your home country, sir, as you mentioned. What can, at the governmental level, what can the governments do to actually encourage more cross-pollination when it comes to both investments as well as founders relocating, Indian founders of startups relocating to this geography over here? So either one of you can take the question, if you will, and then the other one can take.
Okay, so in the Gulf, there are, different regimes. We can say different services are provided, and now there are some on a competitive, Dubai today is leading because of the facilities that the government is providing, the obstacles that are removing, and you can see from statistics that you have more than 400 nationalities today in the UAE, which never happened in maybe a lot of countries in the world, and this is only because of the investors' trust in the system. They have it's been tried, and it's a bulletproof that you put your money and you can take your money. And this is where the investor, they want to have this luxury of this facility of easiness of transfer of money. And the good thing is that, and we experienced this, when we had one of the investments initially, in the early 2019, one of the companies called Fadl, and this company, there is no you cannot put it in any of the categories in the commercial side. So in government of Dubai, there's a committee that they basically, whenever there is no licensing for that specific type, they give you you can say a temporary and a draft license till they basically test your product if there is a potential for it, and then they draw the law for it. So this is where you can see the difference between what's happening today in Dubai and the following of the other nations. That yes, every country is providing their own services, but today I think the lead is Dubai is leading.
Mr. Mahir.
Brother Arif, really summed it very well. As an investor, you're looking for a few things. One, you're looking for funds. People be able to support you. And if you want to establish a company, you're looking for a regulatory environment which is conducive for you to do business regarding the sectors you are at. Third, you're looking for security, both physical security and investment security. So the UAE has, of course, understand that, and they've been working on that for a very, very long time. So we start with regulation, and the first point will come automatically then, which is how do we make sure that people can come and open up their businesses and regulation will actually support that happen. Let me give an example on, for example, something to do with cryptos or something to do with virtual assets, blockchain and so forth. So we created VARA. We learned with VARA, which is virtual asset regulatory body that we started in Dubai. Similarly, Abu Dhabi have the same thing, which is very adaptive in nature. We looked at the best regulation in that space and we adopted that and we said, okay, what else we need to do? Something very importantly mentioned, for every single regulatory body, we have a committee established. So for example, blockchain, there is a committee established, which the constituents of the committees are the government bodies, both federal and local. Private sectors who are relevant, have expertise in this market from the international market, so that we bring them as well. And those who are technical background are very strong as well. So we create this committee to see what other regulations are required for people to come and establish companies in that space where we safeguard them and we also safeguard the public at the same time. And those changes, because we have a regulatory lab, i.e. a sandbox, you're able to test these regulations again and again, and you're able to amend them as things evolve, because the market is evolving constantly. Things are coming up. So you evolve based on making sure that both parties are safe and you don't stifle innovation, you make sure that innovation increases. So you take care of the regulation. When you take care of the regulation, that's you made it safer for people to come and invest, because now you're able to, your investment, you're able to repatriate if you want to, which is very well-known fact about UAE, and your also personal safety is there. Something I was mentioning to you, UAE, Abu Dhabi, the capital, is considered the safest country for the ninth year running globally. It's the #1 safest country. In the top 10, you've got 5 UAE cities are actually listed to be safest cities in the world. That tells you volume. You took out thousands of cities over there. What you also require, if you're establishing a company over here, you require talent. So you want to make sure that the place is easy for people to come and for you to acquire talent. Yes, some of your operation will be done and outsourced in your respective hometown. I'm sure, and that happens, which is fine, because you want to make sure your economics are really there, conducive for you to sell your products or services. But you also require local talent over here. So what do we do that thing? 2 things are happening. One, because of the ease of regulation, because of ease of people getting working permits, people are able to come and establish over here their other things, so they're able to get work. Second, we're also making sure that the local talent that we have, we're skilling them and reskilling them, so you have access to both talent. And this is how we're making it easier for people to invest.
Anirudh, finally, although we don't have a Government of India representative here, as an Indian investor, and your father's also been an investor for the longest time, you run a family office, etc., and all the rest of it. What can the Government of India do to actually make this sort of cross-pollination significantly better than what has already happened, not just in relation to the Gulf, of course, yes, because we are here, but also across other geographies. What is it that is holding investors back, from doing whatever we have discussed over the last half an hour or thereabouts? And basically my question is, what are the impediments currently, and how can those impediments be done away with from an Indian regulatory standpoint?
It's a very wide encompassing question. I hope because the government has to deal with so many eventualities.
Yes.
Let's not forget that we're still living with the overhang of 1991.
Absolutely correct.
So we continue to have policies that are probably from the socialist era. They have done a lot. I think if I just think about the first time we wired in money or took money from a global LP into India, and the amount of steps that were taken to do that to where we are today, things have changed, hugely. You look at Gift City as one of the avenues to come into India. Again, it's a fairly new jurisdiction, but it's growing, and the government has really put their entire effort behind it. I think what they could definitely do, and I think in many ways Invest India, DPIT, they're all trying that, is going to ecosystems like Dubai and taking, let's just do a space tech, let's take the top 20 entrepreneurs of space tech in India and let's go and meet the ministry over here or meet the startups here. Take the top 25 agentic AI companies, semiconductor companies, and start doing more of that just to demystify Because I think sometimes when I come and I speak about what's happening in India, you really see the eyes that go, oh my God, this is really happening. Because unfortunately, maybe we don't market ourselves well enough in places like this, that, hey, this is happening in India, it happened in India, it's happening in India. And I think that's where the government could do a bit more in promoting and possibly even sponsoring, delegates of founders, maybe even investors. I think IVC is trying that as well. But bringing them to these ecosystems, it doesn't have to be that we have to get business. We just need to get to know each other. And once we get to know each other, I'm sure business will happen.
What about FDI regulations and Press Note 3 type regulations? You think we need to get over them now? Because there's an Indian audience, which is why I'm asking you. It is a relevant question.
India lives in a very interesting neighborhood, right? But I think if you look at the effort done by the Prime Minister, and when you look at the relationship with the Gulf, I don't think it's ever been as strong as it is today, right?
Yes.
And there is huge amount of respect, both not just in the polity, but even within the professionals within the government, as well as founders and investors. There's a huge amount of work already happening on both sides of the border. We just need to strengthen this further, and like we've heard before, we have to just build better relationships and just demystify things for each other.
Ladies and gentlemen, I have time for just one, maybe two questions. If there are questions over here, I literally have 1 minute. If anyone would like to raise a question, please raise your hand, stand up, identify yourself and ask your question and who you're asking the question of. Anyone in the audience wants to ask anything?
Yeah, thank you.
Yes.
It was a very great session, a lot of learning. I am Captain Govind actually. I own a shipping company and having a investment advisory where we are raising capital and looking for the good investors. Thank you, panelists, with very good insight. And
please ask your question.
Anirudh, my question is to you is that India, of course, is a 1.5 billion populations with the huge GDP in terms of numbers. If you talk about growth, etc., is okay. What I see the investment which we are taking into India is very superficial at this point of time, like with the tech startups, mainly to Swiggy, Zomato, or platform as service or SaaS. What we see the sleeping giant is in the rural India, where 70% of India is still not been kind of roped into the consumerism economy. And that is being left behind.
So what's your question? I'm running out of time.
My question is that how the GP, as a GP, you look at into exploiting that area, and if you are seeing any kind of investments leading to that actually. So the investment has to flow inside the route actually. The route is India and rural India.
Fair enough. Okay, Anirudh, that question is for you.
It's a great question. First of all, I would not look at exploiting that part of the country, but we have to understand very clearly that rural India has many Indias inside it. Right? India has India Cat A, Cat B, Cat C. They have rural Cat A, Cat B, Cat C. It's fantastic to think about reaching out to this 50-60% of India that lives in rural India. But you have to understand the cost of doing business there is extremely high. So I don't think every startup can address it. And many people have tried and they've recognized that sometimes there is actually systems over there that have been in existence for decades and centuries, that when you tinker with them, you start creating more problems than the one you're solving. So as far as we're concerned, as of now, we're actually more interested in India Cat A and looking at premium services and premium products to sell to the top 6% of India, which is roughly about 100 million people, which is equal to probably the middle class of Europe at the moment. These people have an annual spending capacity of $15,000 or more annually. Which I think has a huge potential, huge margins, and we're really, really focusing on that from point two.
Okay, we are over time, ladies and gentlemen. Please give my panel a very big round of applause. They've been very, very good.
Thank you to all of our speakers, and I'd like to once again request you all to please come together for a group photograph as well. That being said, we'll also set the stage for our next discussion coming up in just the next couple of minutes. But right now, I'm going to request our speakers to please step forward. We'll also capture that in the form of a group photograph. Well, that one's turned out to be a dynamic discussion, if I may put it that way. And we managed to gather some very interesting nuggets of insights from all of our speakers. So with that, I'd like to thank all our speakers, and Aman, thank you so much again. With that, let's set the stage for our next discussion coming your way, and this is all about the Capital Silk Route, UAE, India's gateways to Asia and Africa. That's our next underlying theme. We'll take just a minute to set the stage. Meanwhile, kindly be patient with us. We'll do that really quick. And let me meanwhile set the tone for what our next discussion is about. Now, when we look at the India-UAE corridor, we know that it's fast becoming the new age Silk Route, only this time, instead of the caravans, it's powered by capital, innovation, and serious ambition. What once was a historic trade path is now a high-speed investment superhighway connecting Asia and Middle East and Africa. So for alternative investors, this corridor, in fact, is a gold mine. This is where we're probably talking about thinking next-gen infrastructure, renewable power hubs, or for that matter, smart logistics, tech disruptions, and cross-border platforms built for soaring demand across the two continents. So if you're looking for where the future is being built, this indeed is a map. And that's why this discussion will be more important now than ever before. As we get to focus on the Capital Silk Route, this particular session will be spearheaded by Dilasha Seth, Senior Assistant Editor, VCCircle. So we'll get the session started maximum in a minute. So please stay tuned and stay seated. And for all those who are still standing inside the hall, I know this is the time you get to connect with the speakers as well, but we'll do that during the networking breaks. I'd like to request you all to take your seats. All right, so with that, let's get the session started. First up, let me please invite Dilasha Seth, Senior Assistant Editor, VCCircle. Dilasha will be spearheading the session. But that being said, let me also quickly invite our speakers so that we can get started going back to back with the insights flowing in. I'd like to please invite our speakers on stage. I'd like to invite Kunal Jain, Promoter, SPG Family Office. I'd like to further invite Anup Nair, COO, Interpolitan Money, and Ishan Kaul, Global Investments Head with Cinemas Technology. So if I could also please invite Ishan Kaul to also please join in. We're going to quickly check. I believe we've got two of our speakers here. Dilasha, I guess one of your speakers is yet to join you. If I could please invite Mr. Kunal Jain as well to please join in. Thank you so much for joining us. All right, we're about to gear up for our next discussion, and with that, Dilasha, over to you.
Good afternoon, everyone. Welcome to our session on the Capital Silk Route, UAE and India as gateways to Africa and Asia. Today, we explore how these rapidly growing economies are not just bilateral partners, but emerging launchpads for global capital flowing into Africa and Asia. The UAE-India corridor is no longer just a trading link, but is evolving into a strategic investment super corridor. It is offering alternative investors opportunities in infrastructure, logistics, renewable energy, and technology. This panel will unpack the opportunities, bottlenecks, and what the next decade looks like. I'm delighted to be joined by Ishan Kaul, who is the Global Investment Head at Cinemas Technologies, Anup Nair, COO of Interpolitan Money, and Kunal Jain, Promoter, SPG Family Office. So let's dive right in. Ishan, I'd like to start with you. Cinemas Technologies invests across frontier and emerging markets as a corporate venture capital firm. From that lens, how do you see the UAE and India functioning as capital gateways to Asia and Africa?
First of all, thank you so much, Dilasha, and a very warm good afternoon to the audience. My sincere apologies. We're probably holding you guys back from your well-deserved lunch. But I'd like to start off saying that there's a saying that history doesn't necessarily repeat itself. In fact, history rhymes. If you look at the growth of global economy in the last 60, 70 years, probably after the end of World War II, from 1955 to say 1995, a lot of the development in the world was actually led by the United States of America and Europe. That's where consumerism started picking up after World War II. There was the Industrial Revolution, the transistors were born, semiconductors were born, and that's where growth was driven. Come 1995 onwards, again, China started taking more of the, the lead in driving global GDP. That's where the entire world rewired their supply chain. China brought about 600, 700 million individuals out of the poverty line and into the middle class, and the world witnessed double-digit growth for almost 3 decades. Now, for the last 3 or 4 years, especially post-COVID, I think what we're seeing is that the United States, which was the original flag bearer of growth, is actually slowing down. We're seeing China also not really growing at 9-10%. So where's the next avenue of growth actually going to come from? If you compare data where China was in 1997-98 with a GDP per capita of about $1,800, urbanization of about 35%, workforce and agriculture of 40%, it's actually Africa, which is the closest that comes to China in that growth, right? So if you look at the average age of Africa right now, it's what, 19 compared to Japan, which is 48, 49, US, which is 40. Africa, in fact, is going to add about 700 million people into the workforce in the next 30 years. And do you want to know how much the US, Europe, and China is going to add in the next 35 years? In fact, the workforce is going to reduce by $250 million. So that's the demographic dividend that's actually staring at us right now. So the demand comes from Africa. Now, where does the product innovation come from? I think that's where India is going to play a fabulous role, because what India has demonstrated with UPI, with Aadhaar, we serve 50% of global real-time payments, right? We are world-class in terms of identity. So a lot of product innovations are going to come from China, from India. And then lastly, I think the Gulf controls 30-40% of the world's sovereign wealth funds, right? Abu Dhabi and Dubai combined have 1.5 trillion. So I think it's going to be a combination of these 3 countries which are going to collaborate and going to lead development in the next 3 or 4 decades. Thank you.
Great. Kunal, I'd actually like to come to you now and quickly get your views on the gateway from an infra investor and a family office perspective.
Good afternoon, everyone. Myself, Kunal Jain. We are more than 70-year-old firm into infrastructure sector. We are working almost all over India, developing medical colleges, hospitals, riverfronts, railway stations, roads, electrical substations, and so on. We are into real estate, schools, IT parks, startup investments. Coming to our family office part, we are into startup investments, equities, merger acquisitions, taking NCLT deals, and so on. As ma'am asked, very good question. These days we are going into new sectors in infra because India is giving us very good new opportunities. Recently, for example, we bidded in agricultural infra sector for the grain silos, rice silos that the government is taking out on a PPP mode, DBFOT mode, in which we get very good investment opportunities. We are getting very good opportunities in energy sector, for example, battery energy storage systems. Solar, everybody knows. Now we are getting hybrid opportunities in which solar and wind energy and battery energy storage systems can be clubbed. We are getting hydropower infrastructure sector that is coming up, in which we are getting very good opportunities. Coming to the healthcare side, we have very good opportunities in developing proton therapy labs. In India, we have only 2. Dubai, I think one of the labs is just getting set up. So it is a very upcoming sector and very few people know about it. And secondly, we are coming in India. There is, when we got this Ukraine war, then the opportunity came of more and more medical colleges. When the medical colleges started developing, more and more medical infra came into picture. So government again started PPP projects. Government guarantee we get, and investment is done by the family offices or all the developers in whatever mode they want to do it. The third sector that amazes us is water infra. I don't know how many of you have heard about it. Sewerage treatment plants, water treatment plants are coming in PPP mode. So we are investing in that on annuity basis. Highways were already there on annuity basis. Now substations in power sector also, we are getting substations on PPP mode. Lines, transmission lines where the electrical supply is going on, they are also coming in PPP mode. Along with this, ports are coming, LNG terminals are coming. So we have lots and lots of opportunities that are upcoming in India and Africa. Africa is growing now. India is showing the way and Africa is following it. That's what I think. And UAE has become a base. Everybody comes to UAE, sets up company, they make deals and everything because it is an easy route for Africa and easy to make deals with. And then Indians and Africans are doing big trade. So yeah, that's about it. I have a very long list to describe, but I think I have to cut it short.
Yeah, it's very exhaustive. And now that Kunal has outlined the slew of opportunities in the region and beyond, Anup, I'd like to understand from you, how do you characterize the corridor today from an alternative banking perspective? And what's fundamentally different today compared to 5 years ago?
Thanks, Dilasha. Lovely to be on this panel. We see the UAE-India corridor as just being scratched at the surface in terms of opportunity. You must have seen a very large deal come through where Emirates NBD picked up RBL in India. So there's two-way interest. You see a lot of infrastructure firms out of India setting up their Dubai subsidiaries, L&T for example. You've also got consumer good firms that are coming into UAE from India, Nika, Titan for example. And on the reverse side, you see DP World expanding in India. So the capital is interested on both sides. And one of the aspects that actually slows this down is the banking side of this. And that's where firms like us come in, where we're essentially a transaction pipe to that capital when it comes to moving money between UAE and India. From a regulatory perspective, the world has changed in the last 5 years, Dilasha. Actually, there's a lot that has happened. I think Anirudh Damani spoke about it in the previous panel. But some of the big four headlines that I do want to just kind of touch upon is now Indian exporters and importers' ability to, let's say, open a foreign bank account has been liberalized. So you can stay in India while you have ability to collect and pay in UAE, you can actually open bank accounts, which is a huge surplus in terms of how firms want to internationalize themselves. You must have seen the overseas portfolio investment guidelines that came out a couple of years ago, and that is now beginning to mature, giving access to Indian investors to funds in UAE, because the moment you bring money into the UAE, your ability to multiply that, ability to globalize that goes up. And I think that's the platform UAE offers you. I think the third is, obviously, Anirudh spoke about this as well, was the gift city, which is essentially no TDS, there's no goods and services tax, and there's a tax holiday for about 15 years. So from an inbound investment perspective, this is a game changer. It does directly compete with DIFC at some point, but I think it's a double engine as far as I'm concerned, because if you've got capital interest in India and in UAE, then you are best placed to operate in these two markets, and Interpolitan essentially has presence in both of these places today. In the near term, the way we see this market is, today if I were to look at FDI from UAE firms into India, you're potentially looking at $20-odd billion. And the reverse on the other side is Indian firms coming into UAE is about $8 to $10 billion. Take that out in terms of how much FDI does UAE get and how much FDI does India get on a yearly basis, you're potentially looking at 10%. So in terms of depth, the relationship post-SIPA offers significant depth for Indian capital to come into UAE. And I think Kunal touched upon the fact that SPV creation, company formation, and general support to a founder is much higher in UAE. So obviously that market is seeing increased activity as we build this.
And yeah, so I have a follow-up question. as you mentioned, I mean, we are seeing Indian startups setting up headquarters in Dubai and UAE capital flowing into India. So I want to understand where are the areas where friction still exists in terms of regulatory frameworks, maybe in any other aspect?
Yeah, look, when you, obviously India is capital controlled, so, when you look at selling INR and let's say buying a foreign currency, you have certain limitations that you have to work within. And the purpose of Gift City was to actually give you a local domiciled, limitation-free platform for you to actually globalize your business. When you look at setting up offshore structures, you've got to be careful about how you plan that in terms of your ODI or OPI flows, your FEMA regulations, and make sure that you tick the boxes as far as utilization is concerned. RBI is very, very strict about how the end use is monitored by the banks as well. So you have to play within that framework, but that framework now is slowly beginning to get liberalized. You would have, I don't know if you've heard about, flipping and the reverse flipping structures where you've got Indian firms trying to headquarterize themselves in UAE so that they can accrue better valuation and globalize their business while the Indian entity becomes a subsidiary of that UAE entity. And a big reason that was happening was because of the angel tax regulations in India, which were repealed very recently. So you're now seeing reverse flipping where Indian firms are now going back to India for it to be headquartered again, because the government is looking at how ease of business can happen, not just on strategy, not just at the supervisory level, but even at the paperwork level. There's a long road ahead of us, to be honest. We're not entirely digital, we're not Babu free, so to speak, but we're getting there. I think the intent is very, very clear with how the government's kind of shaping up this corridor.
Great, thanks. Ishan, I'd like to know, I mean, you've made a lot of investments in AI in the last few years. So what role do you think the Capital Silk Route will play in diffusing AI to emerging markets across Asia, Africa, and even globally?
Thanks again, Dilasha. I think AI is one of the least talked about subjects these days, so thanks for bringing it up. If you connected the dots, and if you remember when Mr. Donald Trump became the president of the US, what was the first geographical region that he visited after being elected? He actually came to Qatar, Saudi Arabia, and Abu Dhabi, and that's where the government of UAE actually committed to investing $1.5 trillion in US technology. A large part of it, again, building Stargate, 5 gigawatt of data centers, MGX, G42 investing about $200 billion into US-based AI companies and data centers. I think that's an acknowledgement of the role that UAE is going to play in developing AI in the world, because the regions actually realized that the currency of the past was oil, and the currency of the future is going to be compute and data. So I think that's the one part. If you look at India again is uniquely positioned because India has 2-3 million STEM graduates every year. India has 7 to 8 million software developers, right? A large army of them. So I think a large part of the AI development in the next few years is going to be from this region. Now the point to note here is, I don't think that the true value of AI is going to come from the way it's being used right now, which is it's only being used as tools to write emails, tools to summarize things. That's just a $1 trillion market, which is SaaS plus software services plus IT maintenance. I think the true value driver is going to be when AI actually starts eating not into the $1 trillion tools and software market, but into the $25-30 trillion wages or the labor or the knowledge workers market. So that's when AI actually starts giving you your full-fledged AI doctors in Nairobi, your AI lawyers based out of Abu Dhabi, and your AI tutors in the most remote areas of the world. So I think that's where the Capital Silk Route, I believe, is going to play a very large role in capturing value in the economy.
Great, thanks. Anup, private credit is booming across emerging markets. How important is Forex strategy for private credit or infra investors, according to you, and what are the operational and compliance requirements that lenders must plan for when executing cross-border credit deals through the UAE-India corridor?
Yeah, interesting question actually. In the alternatives space, Dilasha, I think private credit is now becoming the most talked about, the most executed structures. This complicates when you look at, it's a complicated structure when you look at cross-border private credit. And you know what, the three Fs that we keep talking about is, you know, Forex, your filings, and your flow has to be matched. So if you are in a cross-border private credit structure, your underlying cash flows are at risk when you look at what's happening to USD INR, for instance. It can actually wipe out your entire returns on a fixed income sort of a product if you don't hedge those. Now, given the complications of regulations around ODI and what's happening with OPI and your ability to not take more than 10% equity stake in a fund, for instance, it does limit you to some extent, but like I said, I think it's the start of how the Indian regulators are looking at liberalizing the market in a very, very structured, slow way. It also tees in nicely to where the rupee internationalization will be in the near term. So if you want, you know, liberal capital flows between India, UAE, and let's say even in that private credit market, you've got to look at strengthening your rupee, your ability to kind of open, let's say, INR bank accounts in UAE while it flows between India and the UAE market easily. Those steps are being taken, but like RBI says, it's not an event, it's a journey. They will, over a period of time, look at internationalizing the rupee. In the long term, I think the private credit opportunity is a high risk opportunity, but it is the most relevant in terms of how ultra high net worth individuals and family offices are beginning to command those yields. So for us, this is an exciting space because Interpolitan plugs into that cash flows and offers significant solutions around balance sheet hedges and Forex hedges there. So it's an exciting space for us.
Okay. Kunal, so let's talk about the future now. By 2030, what infra projects, according to you, will define the capital Silk Route?
Well, as I just said, the upcoming energy, digital, logistics, healthcare, ports, and all the infra coming up. In this, as per this Silk Route, I think as UAE plays a very important role between India and Africa, the aviation sector will grow like anything. The nuclear power will come into picture as I am noticing the things, but not getting a good technology out of it. The digital infra, the data centers, as you hear, the fiber optics infra, I don't know how many people have heard about it. It is also coming on a PPP mode. Oil and gas pipelines are already there on a PPP mode. Very big players are deriving it. So I think these will be a very new and creative areas that will come up, and we will all be into this high-tech environment in the upcoming years to come. And this is all we are seeing in near future, that we will be living in a new world where where how we see things will change drastically as we see now.
Yeah, thanks. Kunal, by 2035, what are some of the other frontier technologies where you think India and the UAE will help drive global breakthrough?
Thank you so much. Dilasha, I think what I've come to realize is that technology cycles have shortened so much that till some time back you could put a bet that this is going to happen 5 years from now. I think it's just so difficult to say what's going to happen, you know, even 1-2 months from now, because things are just changing so fast. But if I were, you know, forced to take a bet, I think two technologies I'm extremely bullish that UAE, India, and the Silk Route are going to make a lot of progress on. I think the first is the future of computing. I sincerely believe that right now, we're in the stone age of computing. You know, if you look at the way classical computers work, who just work on logical bits, which is 0 and 1, they cannot do some very scientific calculations like some cryptography algorithms or solving problems like the traveling salesman or even finding root causes of certain diseases. To run some algorithms, it actually takes those quantum computers thousands of years, and humanity doesn't have time to wait for those answers. I think there are lots of problems that can be solved once you start moving, once you make advancements towards quantum computing, because you'll potentially be able to look at solution of cancer, solution of diseases, extending human life, looking at different types of electric vehicle materials, looking at better fertilizers. So I think there's a lot of work that can be done, and over the next 4-5 years, I think a lot of these quantum computers are going to get more and more efficient. And some of the computers we use right now, like some of the Macs you have open here and some of the iPhones here, are going to sound very, very ancient. I think that's one. The other is nuclear fusion. And I think this is where, again, UAE is going to play a very large role. So obviously, UAE has been the energy factory of the world, from the fossil fuels to the oils. And UAE has also been doing a lot of work in nuclear fission. But I think if you invert the nuclear technology and you move from nuclear fission, where you actually break a uranium atom, but you move towards nuclear fusion, where you join two different hydrogen atoms, the advantage is that you will actually have unlimited energy for the entire planet. So the idea is that hopefully in 10-15 years, just like we are breathing the air here, which is free for us, all of humanity is going to enjoy electricity as if it's ubiquitous and it's a right for each one of us. So it's just the way the sun works, right? So the sun works on the principle of nuclear fusion, and it's just like building the sun on the planet Earth, because the sun is going to give energy at least for the next 6 billion years, right? So I think these are two areas where India and UAE are going to do really well. Thank you.
Great. Thank you so much. I can still take questions, maybe a couple of them from the audience. Are there any questions? Oh, yeah, there's one. The microphone.
Hi. Many Indian groups trying to transact around the region a bit more. Maybe they want to set up other companies in those different countries to get bank accounts there, partly because the banks in their own countries struggle to understand how you can either export to another country without having an actual presence there, or you're a family office wanting to diversify your jurisdiction and banking partners. With India's growing trade routes around the region very significantly, what is the future of making a more seamless transactional process work for transactions and supply chain invoicing?
Yeah, I guess that's kind of teed up to me, but interesting question there. I think that we're still some time away from seeing total fluidity as far as rupee and any other currency is concerned. Obviously, there are limitations there. But like I said, I think the government's intent is very clear that they want to support clean capital that is moving out of the country and growing the Indian GDP while it elevates its buying power. So you will see a lot of Indian firms wanting to come to the region simply because they're setting up a re-exporting hub, for example. Take Ashok Leyland or an L&T, for instance, that's actually setting up these hubs in UAE. And the government's supporting that by actually making sure the ODI rules are simpler from what it used to be. On the banking parallels, I think one of the things that we specialize in is actually offer those bank accounts digitally. But having said that, I think regulations are becoming more and more difficult. I wouldn't say, it's in some shape or form difficult, but it's also becoming onerous to ensure that you meet local regulatory requirements in GCC while you're supporting global capital movement out of India or anywhere else. So yeah, some time away, but it's work in progress.
Yeah, there is one. Do we have time? Okay, I'm sorry, we can take this off the stage. And thank you so much to the panelists. It was an enriching discussion.
Thank you, ma'am.
Thank you so much.
Thank you. Thank you so much for that future-forward thoughts that we managed to gather from all of our speakers. I'm going to urge you all to come together. We'll also capture that in the form of a photo op. And then we'll move on now to a special address coming your way. So let's hold on to that as well. Much awaited, I must say. Thank you once again. All right, ladies and gentlemen, joining us this afternoon, we have an incredible humanitarian who's in fact about to share his valuable nuggets of insights. And that being said, he has also been a corporate leader and having been part of the leadership roles in multinationals for more than 35 years. And he's someone who comes with a vast experience in business excellence, having become an entrepreneur, in fact, at the age of 46, and he's someone who's actually had a successful journey and is also a multiple recipient of many, many prestigious awards, which is why we're now about to hold on to that insights and hold on to that curiosity for our next esteemed speaker who's about to join us in a minute. I'm going to request all of you to continue being seated, and please stay tuned before I invite our next special guest here this afternoon to share his valuable thoughts with us. Well, after that, we'll also have a very important white paper release that we will be launching here. This is after the special address, and a very crucial topic that we will be addressing. So yes, all that and more that's about to take place within the next few minutes. So let's hold on to that as well. In fact, our next speaker, with his vast expertise in global relationships, he's also someone who's taken up challenging assignments with the private offices and also to make it one of the most acclaimed and accepted business organization in the world. And yes, he's often known as a very good humanitarian who's also serving as an ambassador to about 10 NGO organizations across the world. So that being said, I'm equally excited to hear from our next speaker, just like many of you are. So we're just going to allow for another minute, and then we'll set the stage to invite our next esteemed speaker right here at the Limited Partners Summit, the second chapter that's taking place right here in Dubai. So just hold on to that. Now, as we continue exploring all the topics, as we continue exploring all the thoughts that our speakers have been sharing this afternoon, we have the august presence of Ambassador Dunstan P, CEO, Office of Sheikh Ahmad bin Faisal Al Qasimi. So I'd like to please invite on stage our special guest who's about to join us to share his valuable nuggets of insights. We have with us Ambassador Dunstan P. And can we have a special round of applause for that special address coming your way? Let's make it louder. Fill it with a lot of enthusiasm. Thank you so much. And thank you, sir, for joining us. Over to you.
Good afternoon, distinguished limited partners, esteemed investors, founders, innovators, and friends. It's actually a very challenging task for the last speaker before lunch because normally we end up talking to empty chairs. But anyway, thanks to all those who are present here. And normally I take the first slot in any events, but today because of time constraints I couldn't come in the morning, so I had to take this slot. It's a privilege to stand before an audience that represents the backbone of global progress, people who do not merely finance the future, but shape it. with clarity, courage, and conviction. If there is any country in the world that has turned its deserts into a global engine of opportunity, it is the United Arab Emirates. A little over 5 decades ago, the UAE was truly an oasis, a place of potential promise and possibility. But by a rare formula, visionary leadership, bold capital, and an unwavering belief in the future. In a world facing volatility, the UAE stands as one of the few places where capital finds trust, entrepreneurs find freedom, and ideas find momentum. Today, we meet under a theme that is both poetic and profoundly strategic. Oasis to opportunity, bridging capital, building futures. It reflects where we stand today, at the crossroads of abundant capital, boundless ambition, and a global marketplace hungry for ideas that can reshape the future. I believe that this summit will create a space where capital finds direction, where investors discover new frontiers, allow innovation meets long-term conviction, and where visionary founders meet partners who believe in their journey. It is here that we align capital with purpose and ambition with opportunity. Capital is most powerful when it is connected to founders, to ecosystems, to regulators, to data, and to long-term social needs. But capital alone does not build the future. Partnerships does. The role of limited partners today goes beyond allocation. You are catalyst of innovation, architects of ecosystem, builders of industries, and stewards of long-term value. When capital is bridged effectively, early stage innovation becomes global impact. Emerging markets become investment powerhouses. Small firms become category defining giants, and entire sectors get reimagined. LPs are no longer investing in companies, they are investing in solutions, in transitions, and in transformations. And the bridge they build between capital and the opportunity determines how far these solutions can go. LPs are the silent powerhouses of global growth. Your strength lies in patience in a world of impatience, discipline in a world of distraction, conviction in a world of uncertainty. As we look forward, the question is no longer where should we invest, but rather what future are we ready to build? Because the capital deployed today will shape the cities our children live in, the industries that will dominate tomorrow, the jobs future generation will hold, and the sustainability of our planets, the fairness and inclusivity of our societies. We are not just building portfolios, we are building civilizations. This summit is more than a meeting of capital. It is a meeting of minds, values, and visions. Let us commit to bridging capital with courage, ambition with responsibility, and innovation with humanity. Let us not just chase opportunities, let us create them. Let us not just build portfolios, let us build futures. Let us walk forward with conviction. Let us build boldly, partner deeply, and lead with a vision. Initiatives like Operation 300 Billion, the UAE Net Zero Strategy, Dubai's Economic Agenda D33, and Abu Dhabi's Investment Acceleration Pathways send a powerful message to the global world. This nation is determined not only to lead the region, but to lead the world. And this is your responsibility, this is your opportunity, and this is your moment. Thank you and have a great day.
Thank you, Ambassador. Thank you for your visionary thoughts. Well, oftentimes we hit a rewind button going back to the glorious past so that it can also give us insights in order to build a glorious future. So I'd like to thank you as well for your august presence with us right here at the Limited Partners Summit 2025, the Dubai chapter. That being said, we are also now about to shift our gears right away because this is where I'd like to bring your attention to something really crucial. First up, we are about to have your presence for the unveiling of the white paper that's titled Agri-Food Innovation for India, GCC Corridor, Feeding the Next Billion. Now, first up, before we get to hear and understand what this white paper is about, I'd like to please invite on stage Mark Khan, Managing Partner, Omnivore, to please come on stage, sir. And further, if I could also please invite Anitesh Dharam to also please come on stage. We'll firstly have you both unveil the white paper, and then we'll have you also share your thoughts about the white paper. So we'll first do the unveiling, sir, and then I'll invite you to share. The other way. So first we'll request you to share your thoughts. Ladies and gentlemen, if I could have everyone's attention. While we will be unveiling the white paper, first up, let's get to understand a little more about what this entire insight and the study has been about. So, Mr. Mark, over to you then.
So the only less envious role than the one played by Ambassador Dunstan is mine, which is keeping everyone in here for another few minutes. It's a pleasure to be here today. I am the managing partner at Omnivore. We are a sectoral VC fund that has been operating in India for 15 years, focused on agri-food and climate. Basically helped catalyze the sector in the early 2010s, coming out of a partnership that we had at the time with Godrej Agrovet, and have been the stalwart builders and supporters of the sector ever since. It's been a long journey, but most recently we raised an 1,800 crore fund backed by leading global LPs and have been honestly quite active in the last few years. A number of my teammates, Karan Kaswani, Rehem Roy, who's a partner with me in Bangalore, and Abhilash Sethi are also here for the event. And the purpose is to announce this white paper that we have worked on together with VCCircle. The title of the white paper is Agri-Food Innovation for the India GCC Corridor. And our interest here is something that's built over the last many years from our portfolio. This is not something that was kind of masterminded by a bunch of VCs sitting in Bangalore. It was our portfolio companies saying, how can we begin to participate in all of the growth that we see in the GCC? How can Indian agri-food startups participate in Saudi, in the UAE, through exports, through partnerships? And over the last year or two, I've been spending personally quite a bit of time here, and that has begun to show tremendous promise. Multiple Omnivore portfolio companies in India are now exporting heavily into the GCC region. We have companies like Dehat, the largest farmer platform in India, which is exporting significant amounts of fresh produce into the GCC. We have companies like Farmly, which we backed from almost inception, bringing their delicious makana and snacks to the Indian, to the Desi diaspora across the GCC. We have companies like Agrizy and AquaConnect that are beginning to do business here. And this really kicked off an idea that we had about building an agri-food bridge between India and the GCC. And it only makes sense, right? The GCC obviously has, as one of its greatest challenges, food security. And while part of meeting that food security has come from incredible initiatives, which I would characterize as food sovereignty, where the GCC is trying to grow more of what they consume. Salal has done a wonderful job of that in the UAE, Salek in Saudi Arabia, and others. Obviously, the region is dependent on other places to source their grain, their fruits, their vegetables, their dairy, and whatnot. And I've always felt it was incredibly obvious that India is the logical supplier to this region. Historically, that has been bilateral trade, right? We have our banyas, they have the banyas that we sent them. And those people do business with one another, right? Sometimes people that have lived here for decades. But what you haven't had is a tremendous amount of investment. You haven't seen the GCC investing in India, and you haven't seen the full potential of this partnership. And so we've launched this white paper together with VCCircle to start building some thoughts about what this could ultimately look like. And we really see the potential as having kind of three core pillars, which we would characterize as trade, tech, and talent. Trade, we want to see more Indian companies exporting to this region, but also investment from this region going back to help build those companies in India. What historically was bilateral blind trade by brokers needs to be investment on one side and guaranteed output on the other, and growing specifically for the needs of this region. And we're seeing that again with companies like Tehad and AquaConnect and others. Tech is another aspect. We've had now a few $1 billion invested in the last few years in Indian agri-food and climate tech. And the interesting thing, if you spend time in the GCC, is you realize that when they think about tech, they always look west, they never look east. They look at San Francisco, they look a little bit at Europe. They kind of miss the glaring 1/5, 1/6 of humanity right next door that is becoming very rapidly a deep tech superpower. But with a caveat, a deep tech superpower that's focused on affordability, decentralization, frugal engineering. And I think sometimes proximity is actually a bit of a curse. Right? The UAE and India, the KSA and India have had such long relationships that I don't think people in this region understand what's actually happening in the deep tech, in the climate tech, in the life sciences, material sciences ecosystems in India, the quality of the technology that's being developed. Right? We had folks up here talking about Agnikul earlier, where we were very early backers of Pixel. And so we think the second pillar of this agri-food partnership is to bring the best technologies out of India into the GCC. So it's not only overpriced, overbuilt, white elephant American technologies being brought here, but frugal engineering that can be rapidly scaled for the needs of this region and that come from a region with more similarities to it. And the final piece is talent. There is a growing startup ecosystem, a growing climate startup ecosystem in the GCC. There's not a lot of people that support it. We intend to begin working in that direction, but one of the first things we see is the potential for GCC startups, things coming out of the likes of Hub 71 or backed by folks like Venture Souk, working with India in terms of bringing in the best and brightest climate scientists, material scientists, life scientists, agronomists, right? Bringing that talent pool from India to support these startups in this region. We are very bullish on this space. We think it aligns incredibly well with the national priorities of all of the GCC members, where food security, especially since the pandemic, has been top of mind. And we are going to become much more active in this space in terms of our own portfolio, but also supporting startups in this region itself. And so the purpose today was to A, tell everyone we're doing this, and B, to say that when we launch our next fund, this will be part, not all, not even 50%, but a piece of what we build when we launch our next fund in 26, 27. So it's an honor and a privilege to be here today. We're incredibly bullish about this opportunity, and stay tuned. It's going to be very, very interesting to see what we all build. Thank you.
Thank you very much, Mark. And on that bullish note, let me also please invite Anitesh Dharam to please join in. And as we manage to gather a little more about what this white paper is about, how it actually explores how India and GCC can work together in order to build a more secure and resilient food system for the long term, let's actually go ahead and unveil the white paper for all of you. So let's have the white papers on the stage, please. Let's do that. Keep that applause coming, ladies and gentlemen. Let's do that as well. Agri-Food Innovation for India, GCC Corridor, feeding the next billion. Now, as the unveiling happens right here, that's the physical copy of the white paper, but you can also go ahead, scan the QR code on the screen to download the report. We also have the tent cards that have been placed across on your tables as well. So we also have the QR codes on the tables. Thanks so much. So I'm going to urge all of you to go ahead, scan the QR code on the tent cards that have been placed on the tables. Go ahead, and that way you can also download the report and then deep dive into all the insights that have just been shared. Thank you once again, Mark, and thank you, Anitesh. So on that insightful note, we're now about to head for the lunch break. Why? Because we managed to gather a lot of food for thought. Let's now put your thoughts on food. Ladies and gentlemen, the scheduled break is for 45 minutes. And while the lunch is being served outside, please do indulge in some conversations. Take those discussions forward with our speakers. Enjoy the lunch and see you all exactly in 45 minutes. Thank you. check. Ladies and gentlemen, we'd like to request everyone in the pre-function area. Let's have you all come back inside. Time for our final set of sessions for the LP Summit 2025. We're about to begin that right away. I'd like to once again request everyone in the pre-function area to please come back inside the hall. As much as the desserts are still tempting, but we'll have you all back inside the hall to get our next set of sessions started. Thank you. All right, the stage is set and we're about to get our next session started. Once again, I'd like to request everyone, let's have you all back inside the hall. Time to gear up for our final set of sessions. All right, welcome back, ladies and gentlemen. We're about to move ahead to our next segment. But while we do that, I'd like to take the opportunity once again to thank our incredible partners. When we're trying to put a future-forward conversation together, the only way that can happen is by having incredible partners on board. So we'd like to thank our presenting partner, Dubai Economy and Tourism, session partners, Interpolitan Money, Nissus Finance, and Bexley Advisors and HDFC Capital. Knowledge partner, Omnivore, and experiential partner, Champion Infra Tech. Well, that being said, let me also inform you all that just before the lunch break, we also managed to have the white paper launch. And I do hope you have gone ahead and scanned the QR codes that's on the tent cards. If you still haven't, go ahead, scan the QR code that's placed on the tent cards so that you can go ahead and download the report. All the insights that have been in the report, you can go ahead and download them as well. All right, so on that note, looks like we've all enjoyed the panna cotta in the dessert section. We've all enjoyed the food as well. We've all enjoyed the hearty conversations. But let's keep it flowing for the next 3 sessions. The plan is that we'll be going back to back so that towards the end of the sessions, we'll come together for a lovely break wherein we can all get the conversations back again. So yes, we'll be going back to back, and I would request for your utmost attention and a lot of interaction as well. With that, our next session is all about risk management and asset classes. Now, Gulf conglomerates, in fact, are running their own private equity machines, often avoiding sectors where they already operate to keep the portfolios diversified. So, that being said, let's also understand a little more as to how effective is this rule and when does it really make sense in order to break it. And let's actually get together to decode the smarter play. So this is where the underlying theme is all about conglomerate's degree of exposure. Now, once again, we have Aman Malik, Senior Editor, VCCircle, who will be spearheading the conversation. But joining us this afternoon, we have with us Dr. Ruchi Dana, Partner and Executive Board Member, Dana Group. And we also have with us Walid Saad, Country Head and CFO, Saif Belhassa Holdings. So if I could please invite. All right, so we have with us Walid Saad, who's the CEO, WIR Investments. My apologies. And that being said, ladies and gentlemen, in most of the conferences, a post-lunch session is called a graveyard session. Why? Because we've enjoyed such a good lunch. But if you've enjoyed the lunch here, can we have a hearty round of applause as well? So that we can come together, bring the energy back in the air, welcome our speakers, and with that, Aman, over to you.
Thank you very much. Yes, this is a graveyard session, but we'll make it as lively as we possibly can. We have 2 very, very good speakers, and backstage I was having a very nice conversation with them. They're very, very acute into what they're up to. Let me start off with Dr. Ruchi Dana. Dr. Ruchi, you have a philosophy that you do not invest private equity type money into the sectors that your core business operates in effectively. Explain your philosophy. Why do you do that? And has it landed you in good stead thus far?
Sure. Thank you so much. And it's an absolute honor to be here. I'll start off with a brief introduction about myself and the family business. So I'm Dr. Ruchi Dana. I'm a medical doctor and a Stanford MBA. I was born and raised in the Middle East. I was born in Libya in north of Africa. And then our family moved to Dubai in the early 90s. So both of my parents were doctors back in Libya, and when my dad came to Dubai, he started his own business. That's the family business Dana Group of companies. We are now into manufacturing, mainly into steel and oil. Steel would be like rolls, steel coils, fencing, sandwich panel, cable trays, and oil would be lubricants and grease. So to Mr. Aman's question about diversification of risk, this is one thing that we have focused on, that whenever we invest into things that we understand, it's much better. But if it's a pure investment in which we are not hands-on, that's something we cannot do, because we are so much expert in a particular industry. It's difficult for us to just invest into things and not take control. So when it comes to investments in which we have some sort of control, or if there's some sort of synergy with the business, we do acquire such assets and we merge them into the business. But when it comes to funds, it's only funds, PE funds or VC funds that we invest into. We invest into those funds in which we don't have a particular expertise. For example, like if it's a healthcare fund, we would rather do direct deals in healthcare because that's something that we understand, being a family of doctors. But if it's a like deep tech fund, or if it's a crypto fund or things like that that we don't understand at all, we would like to go through funds instead of direct investments. So that's one strategy that we have done in terms of de-risking ourselves. So because sectors that we understand, we try to go in all in and direct investments. But when it comes to funds, it's usually sectors that we don't understand at all, and it's better to go through a fund, and then the co-investment opportunities would come through those funds instead of direct investments, because they do their due diligence, and then we'll be able to do our own due diligence as well. And similarly, in terms of risk diversification, we pay a lot of focus on geographical and geopolitical risk as well. So we have 9 factories here in the Middle East. That's one of the reasons we don't invest into startups or companies that come within the Middle East, because we already have a huge exposure to the region. So when it comes to investments into funds, we try to invest outside of the region. It could be the US, Europe, Southeast Asia, or India. In Indian investments, it's mainly the real estate investments that we have had, and the revenue that keeps coming from those investments keeps going to like build more real estate within India. We do have a hospital, a hotel, and some warehouse complexes back in India, and I think like it's generating good yield, so we are fine with that. But when it comes to operations into steel or oil, we just invest into the factories, or we make acquisitions within the region in the Middle East. When it comes to sectors that's outside of that, we do investments outside of the UAE. So
fair enough.
A lot into the US.
My question now to Mr. Walid is basically this. There's one approach that Dr. Ruchi follows, which is not investing in the sectors that their core business works in. And there's another approach that several other excuse me, please, investors follow, which is that they double down on the sectors that they know best. Now, these are 2 extreme approaches. In your esteemed opinion, sir, which of the 2 approaches works best, or is there a middle ground that you think people should follow? That is point number 1. And point number 2, how does your opinion reflect upon your own investing strategy, sir? Your own investing strategy, is it also middle of the road, or is it one extreme versus the other extreme?
Thank you very much for being here with VCCircle. This is not the first time, it's the second time, and it's my pleasure. And Gulf region is very dynamic, and then this type of seminars and sessions need to be regularly there to just catch up whatever's going on. So with Dr. Richie, whatever she said about her group, this is understood, and then 80% of the investment should go to the core that you know about it, and then your comfort zone. Otherwise, you know that treasury will not gonna go in a proper way. So answering the question, actually, I'm here in UAE since 3 decades. So I can see that changes happen in the last decade, that the third generation of business owners are now start up their own business. So the founders, to let their kids and their grandsons and all that to be attracted to join their business, they have to give them some free hand to come up with some ideas, like now we know all about the digital assets, and not only cryptocurrencies like trade, it's cryptocurrency just trading. I'm talking about the applications and all. We know already the delivery companies, it's cost now billions, and there is many of applications and services like this. So my point here, having the third generation is start to lead right now with the parents and the founders, right? You have to make it attractive to them that they can add their ideas and they come up with their own business. Otherwise, they will just get some share and then start with their own as a SME. So the failure level will be high. My point here for any group, the percentage to your comfort zone, maybe it could be more than one area. It could be real estate, manufacturing, oil and gas, whatever it is. And 20 to 30% will go to new investment. And that new investment, it should match to the market, whatever is going on right now. With the rate in Dubai, 576 person on a daily basis in 2025 becoming residents in UAE, that's not a small number. The plan for 2040 in UAE, with the changes for the infrastructure and how they segmented the country geographically, and this area for business, this area for services like that. So you have to diversify, and this is basically the risk analysis. If you have your only one business, maybe new technology will gonna come, right? Then your business will be in risk.
Disrupted.
So diversifying is like, it's a must actually, I see. But the percentage, if you go higher, now you're going to get you'll get high risk, it's up to you. But if you failed to really harm. So I'm in between to be like 70% on your core to 80% and 20 to 30 for new type of businesses, which is a lot. It's not only one.
Okay. So you think a majority of investments should remain in the core business?
Yes.
So you do follow quite a different approach from Dr. Dana.
Because automatically that 20-30%, by the time it will grow and take a better share from the overall. And then again, I'm talking about practical situation where the founder will not going to give the free hand completely to the next generation to lead until they have a proven success, and they do have.
Okay.
So that will be another point whenever we discuss.
Fair enough.
Thank you.
Dr. Ruchi, your diversification is it only or majorly sectoral, or is it also geographical? Are you therefore, do you also invest to diversify, sorry, outside of this geography or other geographies that your businesses operate in?
Yeah, sure. So we have 9 factories here in the UAE, in Dubai, Ajman, Al Quwain, Abu Dhabi. And when it comes to like investments that any opportunity that comes across, if it is like synergistic to the business, like if it's a oil factory that's a SIC unit and you want to turn it over, if it's within the region, we can do that. But if it's something that's pure investment returns in which we don't have any controlling stake, it's a pure investment through a fund or through a direct investments, we try to invest outside of the region. And the reason for that is that there's a lot of like geopolitical risk that happens in this region. So when it comes to investments that are pure based on returns, it's better to invest outside of the region. So we invest quite a lot into the US, Europe and Southeast Asia.
Okay. Now, my question to the both of you, starting with Mr. Waleed and then with you, does India, when it comes to your diversification strategies that you may be following, does India at all figure anywhere, or is it likely to figure anywhere? And if it does not figure, what have been the impediments thus far, and what would you like to change for India to figure among your investment destinations?
Actually, for India, India is not a small country now, it's the biggest in the population. And then we have to consider this, especially UAE, most of the experts and companies led now by Indians, right? So we do some type of collaboration. Actually, like let's say the main business is here, but the back office or whoever is serving it, they are staying in India, like, but not in India geographically by itself.
Okay, Dr. Dana?
For us, we do have a lot of assets in India. It's mainly like real estate assets or assets that carry our name and we can like rent and a profit share. For example, the hospital and the hotel, they're in our own name, but we don't run the day-to-day operations. We have given it to, like for the hospital, it's a group of doctors that run it and we get rent and a profit share. And when it comes to further investments into India, it's mainly like the investments that, the returns that come from India, they are reinvested into India. We don't take that money out. But I think lately, like Indian markets have been performing amazingly well for the past few years, and we felt a lot left out. So we have been exploring a few funds. But those are again like Mauritius-based funds which would invest into the public markets in India. So we would get some sort of exposure, but like we haven't yet made an investment into those funds.
Dr. Waleed, within the areas that you invest in, which I'm assuming is, and correct me if my assumption is wrong, the Gulf region for the most part, what are the regulatory impediments that you face? What would you like changed on the regulatory front? What would you like local governments of countries like the UAE or other countries that you may be investing in the Gulf region, what would you like them to change?
If I answer this question as like I'm living here for a long time, it will look like a compliment to UAE actually, but in reality...
Fair enough. If it's a compliment, it's a compliment.
In reality, the government are more advanced than the investors. Like when I talk about digital assets as an example, now they regulate most of this, regulations in Dubai and Abu Dhabi, the ADGM as an example. So they make it easy for people and to be safe whenever they are investing in this segment. About India also, I can just say that, we all heard about AI and then, how they will be big part of the business. So India definitely, because they are very advanced in the ICT and all that stuff, it can be a good backup for any type of AI projects, right? And I cannot say AI, it's different. Like if I ask anybody sitting here, including myself, they will say different things about AI. But within a very short period, the AI will become big part of the business, right? So where India, you can invest right now, and that will not be a big investment in the startup, okay, for those companies. Because anyway, it will take time. Even you didn't make money right now, it will be within like 2 to 3 years, not even more than this. And then you can like collaborate with other companies or other groups like this. And then within a short period, it will be something really big. Okay. So that will be under the 20% which I mentioned.
Okay. Dr. Dana, when you say you have some investments into India, etc., one, how significant are these investments in the, as a total factor of the, your investment pool? And two, would you like the Indian government to make any significant regulatory changes to attract investors, Gulf-based NRI investors like yourself, to sort of pour money into the country?
So I would say because we've been outside of India, like my dad has been outside of India since 1980, so it's been a long, long time. So that's the reason we don't have a lot of investments into India. It would be hardly like 10 to 15% of our net worth in India. In terms of the government regulations, I think one of the main problems that a lot of investors are facing from India is to take the money outside of India through the LRS route. That's very limited. So many times people want to make investments outside of India and they're unable to access the capital. So I think on that front, and I heard Indian government is doing a lot on making it much more accessible, but I think that's the main hiccups that a lot of NRIs.
And when it comes to the UAE and other markets, he said, are you happy with regulations over here, or would you like any changes here?
No, I think here everything is very transparent and it's very quick and easy. There's a lot of compliance, but if the compliance is met, the KYCs are met, then everything happens very quickly. So I think I'm really fond of those regulations here.
Starting with you, sir, which are the sectors that are giving investors like you and then you, madam, the best alpha currently and will continue to give you guys the best alpha, the best returns, if you will, over the next 5 to 7, maybe even 10 years? Are you betting on specific sectors and are you betting heavily on them? You mentioned backstage we were talking about, and you also mentioned AI, of course, but you also mentioned digital, etc.
I can say anything related to services.
Services?
Yes.
What kind of services?
Anything related to service, because again, you are in a place where all the business people are meeting here, right? And they're expanding. So I consider the real estate, of course, in different category, it's type of a service, okay? And then you need to do it with a modern way, the tokenization as an example, where you can buy an asset by a group of people and everybody is going to get some small share and all that stuff. So this is type of service. Right now they talk about, the flying taxi and all this stuff. So
yes.
I'm talking about any type of services you're going to provide to those people who's residing in Dubai or UAE or in the Gulf region. This will make you really successful. The market can take much more than what's happening right now. You can see the real estate companies. Recently, I will not mention the name of a company, but definitely will tag it, right? Within 4 years only, they are doubled from 10 billion to 20 to 30 to 40. Now they are heading to 80 billion dirham business.
Wow.
In 4 years only. In a big projects with well-known names, and it's very high in a value. So they sold it all and they keep going, and they didn't take the market share for anyone. They have their own market share because the market itself is getting bigger.
Okay. Yeah. Madam, last word to you, sunrise sectors that you see for the next 5 to 10 years?
So our expertise is mainly healthcare. So in healthcare we've seen a number of things. We have invested a lot into robotics, low-cost surgical robotics, then the use of AI for drug discovery, computational biology, really deep tech stuff in healthcare. Because I think that's something if you invest into IP-led companies, category-defining companies, then no matter where the market goes, those companies would still have some sort of intrinsic value and that would remain. So that's the sector we are excited about. And when we don't understand things, but we would like to invest, we try to go through funds. So we invest through deep tech funds. So some of our portfolio companies are Agility Robotics, Quantum. So these are again very hardcore deep tech companies, but we invested through funds. So because we were not the experts.
You're not making direct investments in these sectors?
No, for healthcare we do direct investments.
For healthcare you do direct investments, but for other sectors you are investing via funds.
Via funds, because healthcare is something that we ourselves understand quite a lot. And then we do have a group of doctors and the hospital in India that helps in the due diligence. So we are comfortable making direct investments on our own.
Ladies and gentlemen, we are very nearly out of time. Thank you very much to my panel. They've been very, very good. Please give them a big round of applause.
Thank you, Aman, and thank you to our speakers for joining us. If I could request you to kindly step forward, and we'll have a quick photo up there. But can we have a louder round of applause, because we managed to gather some incredible insights from both the spectrums of the industries of investments and thought processes, and that was absolutely incredible to sort of kickstart our next segment of the program. Thank you once again, sir. Thank you, ma'am. With that, we are quickly setting the stage. Let me again remind you, we have our final 2 sessions taking place, and post that, of course, our speakers will be with us here till the evening. So I'd like to urge you all to please be seated inside so that we can go back to back, get the sessions done, get to hear from our speakers, and then, of course, we can have the networking break towards the end of our final 2 sessions. We're about to get started. In fact, our next session is all about case for alternatives, making PEVC an attractive option. Now, when we talk about private equity and venture capital, these are all early stage asset classes in the Gulf, but sovereign funds dominate the spotlight. But GPs are finally the ones who are carving out the space. Now, while exits may be fewer than in markets like India, yet standout wins are proving the upside. So the big question coming our way is, how is it that GPs can turn LP curiosity into real commitment? So what are the playbooks from India's long journey from lean returns to global hotspot? What are the best practices that can be borrowed, and how fast can Gulf accelerate its own PEVC evolution? I've got 4 of my incredible speakers who will join in right now, and this particular session will be spearheaded again by Dilasha Seth, Senior Assistant Editor, VCCircle. So Dilasha will be on board to extract all the relevant perspectives from her panelists, and we've got our panelists set here as well. Please continue being seated so that we can kickstart our penultimate session for the summit. All right. Looks like Dilasha, firstly, let me have you on board. Let me have you on stage so that we can warm up before we invite your speakers. I'm going to request my team to be a bit more quick on this so that we can quickly get the discussion started. And that being said, let me again inform you all, the underlying theme for this particular discussion is all about making PEVC an attractive option. Okay, so with that, let me go ahead and invite our speakers. We have with us Rajesh Ranjan, Head of Investment, Ali & Sons Holding LLC, Neil Cabral, CEO, Family Office, GFG Alliance, Nandivardhan Mehta, CFO, CAF Investments, and Utkarsh Sinha, Managing Director, Bexley Advisors. We're talking about making PEVC an attractive option. Can we have an attractive round of applause as well, so that we know that we're all geared up? Because that's my big cue to hand over the proceedings to Dilasha, and then hand it over to you to take it forward. Over to you then.
Good afternoon, everyone. Welcome to the session on Case for Alternatives, making PEVC an attractive option. Private equity and venture capital are still nascent asset classes in the Gulf. While sovereign funds dominate global headlines with big-ticket deals, private fund managers in the region are creating a new layer of capital and opportunities. We've seen successes in the form of selective exits and outsized gains. If you take the example of Uber acquiring Careem or Souk.com getting acquired by Amazon, but challenges remain. Exit windows are fewer compared to the Indian market, and LPs are still warming up to the risk-reward profile of alternatives. Now the question is, what will make Gulf LPs more comfortable with PEVC, and what lessons can be drawn from the Indian market? I'm delighted to be joined by Rajesh Ranjan, Head of Investments, Ali & Sons Holding, Nandivardhan Mehta, CFO, CAF Investments, Neil Cabral, CEO, Family Office, GFG Alliance, and Utkarsh Sinha, MD, Bexley Advisors. Let's dive right in. Rajesh, I'd like to start with you. Ali & Sons as a conglomerate has exposure to key industries including auto, oil and gas, and construction. So from your vantage point as an LP and a potential LP, how do you view the PE/VC landscape in the region?
Hello, everyone. So Rajesh here. So for us, we are more than 45-year-old business group, having presence across automotive, oil and gas, and real estate construction and development. So we invest across different regions, primarily US and Asia, for portfolio diversification. Our operating businesses cannot reach those geographies and cannot probably have exposure to many sectors that are not very much in our operating business. So idea is to diversify our exposure across geography and sectors. But we also do selective direct investments where with some strategic fit or a strategic alignment for our operating businesses. So it's like investing in the PE and VC fund across different regions for diversification and investing in direct deals for, say, a strategic alignment.
Right. Great. I'll come to Neil. So as a backer of innovation and private deals globally, how do family offices like yours view the PE and VC funds in the region as against traditional institutional LPs?
Thank you for having me on this panel, and I've run several family offices in the past. I am a firm believer of diversifications, and purely as as a backer of innovation and private deals globally, it's pretty distinctive that especially in the Middle East, most of the single-family offices do view private equity and venture capital as not simply as just asset classes, but they view them as strategic tools, I would say, for long-term ownership and development, and more so now that the new generation is coming into the family office. They are of view that PE and VCs play a strategic roles in growing the long-term business. Most of the institutional LPs invest under strict mandates, defined asset allocation brands, liquidity matching. There's a regulatory risk also that's involved, and most family offices invest with intent. So there's a massive shift between the traditional investment patterns of family offices to where we stand today.
Great, thank you. Nandi, so in one of our recent conversations, you pointed out that family offices in the region, especially single family offices, they prefer to do direct investments in the GCC rather than going via the PE/VC route. So why is that so, and what according to you are the gaps?
So thank you. First of all, good afternoon, everyone. I'm not surprised half of the people haven't turned up after the heavy lunch. So, and those who have turned up, I'm sure it is out of compulsion. So, so I think, it's imperative for you, Dilasha, to understand that Gulf primarily is a house of traders. People understand trading. And they are exceptionally smart. They've interacted with people in the region, abroad, in last 70 years, especially with the West. So the exposure is second to none. So they, the sophisticated family offices, see, I'm the family I represent, they have been in business for 135 years in this region. One of the largest, largest family-owned business. So it's very clear from the family's understanding perspective that what we can do and what we cannot do. And what we cannot do is direct investments outside the region, because our traditional comfort is look and feel, the control. That is very important for the families here. So it's a very simple logic what I'm giving you. If there's an investment opportunity in the region, we will be very open for direct investments because I get the comfort, look and feel of it. If it's outside the region, I will go through the private equity venture capital route. We will invest and they will run the fund of fund program and selectively co-invest alongside them. The second reason we want to do in the region directly, because I do not think, I'm a firm believer of it, that 220 concept with the fund managers years is too much, because we understand the region really, really well. So I don't want to pay that money. Unless the fund manager I'm collaborating with is actually adding that kind of value, it brings institutional grade, advice, there's a great portfolio construct. But if we have that capability in-house, I really don't want to do that. So I think largely a lot of single family offices think quite similarly. And the bigger question from the principal is that if you have to give this capital to a PVC guy, what exactly are we doing then? So that's a difficult situation for the manager.
Right. So a Gulf LP site exit visibility as a key concern, is that also a concern for you? And what can fund managers do to that effect? And can the emergence of secondaries market in the region lend that confidence to LPs and also family offices?
I think don't put this question only to the Gulf guys. I think all family offices all over the world are, they all come, irrespective of the regions and religions and cultures they come from, they all think similarly. I think the exit and the DPI is such a big debate. It's a global debate. The challenge LPs are facing with the GPs is present everywhere. I think the issue is, again, and I go back to the first thing which I said, please do not underestimate that we do not understand the challenges of GP, that we do not understand how markets are behaving. What we expect is very simple: transparency. If my manager comes and tells me that, listen, for ABC portfolio within that particular vintage of fund where we have invested in, IPO is coming in, listen, that statement do not show me what's going to happen after 4 years. Show me the pathway which you have drawn in next 4 years with milestones. Bring that transparency to me. If you bring that transparency to us, we are okay with you. So I think the GPs should really understand that we are concerned with the DPI. Everybody is. Money should come in. If you cannot bring the money in, show me the path. Tell me the story with the plan which is actionable. If you can do that, we are okay with it. So I think what we're talking only about is transparency. Yeah. Second thing is there are innovative products. Secondary funds are coming up, but of course you have to take a haircut depending on the quality of the portfolio. I think the rollover funds is again a good option, but how many new LPs will trust a GP that you will continue and we will give exit to your existing LPs and we will get stuck? So do they really have the formula matured over there? I think there is a challenge around that, but those who have been able to, I think they will create value. So comes back to everything, transparency with your LPs that will build trust. We will not bother you now, and in future we'll deploy more capital.
Right. And just one quick question also on, there's a study which states that there's a $20 billion growth capital gap in the region, right? So how do you look at it, and do you think that you could participate and fill that in the Gulf region?
So we're big supporters of Gulf Capital. It's a private equity fund here. We have believed in the story. We believe in the region. We believe in our partners over there. We deployed capital in past, and inshallah we will do that in future as well. Remember, the alignment of families with the government initiatives is, they think, they take the first steps and everybody else follows. So wherever the gap has been identified, government will take the initiative and the families will follow. So I do not see that capital is a challenge for the region. We are exporting capital. You can imagine that this region would have no challenge from that particular perspective.
Right, thank you so much. Utkarsh, coming to you, India has emerged as an attractive LP capital destination for LP capital. So what factors have contributed to it, and what steps can the GCC take to that effect?
Sure. Thanks, Lash, for the question. I think the maturity that you see in India today is a function of efforts that have been put in place for the past 20 odd years or so. And the advantage of India is that it has gone through multiple cycles. Some of those cycles have been aligned with global cycles. Some of those cycles have been detached from global cycles. And a lot of international LPs have participated with Indian GPs in multiple of those cycles. So that's factor number one. Number two is that, India has a secular growth story. So there's a lot of beta that's generated. So any LP who comes and participates in the market has the benefit of that, growing with the rising tide. But on top of that, LPs who have been really good and have selected good partners, selected good GPs, have seen a lot of alpha. And now we are reaching that point where distributions have started happening at scale, exits are happening meaningfully, and therefore capital is starting to be returned. The regulatory landscape is such that repatriation of capital is not a challenge. The only challenge that India faces, unfortunately, is of the the USD INR, the exchange rate, and the following rupee is something which ends up being an additional tax on returns which are very, very healthy in INR terms. So one of the biggest accelerants of this in the past 10 years or so has been the government schemes that have been launched. So whether it is fund of funds scheme by SIDBI, whether it is SRI, they have seeded some really good funds, which funds have then gone on to get 4x or 5x additional capital from LPs within India and outside, particularly from outside India. So I think something similar over here, I do feel will have a largely beneficial role in identifying which are the sectors. So for example, the latest fund which has been launched in India is a $10 billion fund, more than $10 billion fund by the Ministry of Science and Technology, which is to back funds in deep tech. And that fund is going to, I'm sure, bring at least 4 or 5x of that amount of capital into India. So identifying sectors, whether it is like, you mentioned the $20 billion gap in secondaries. So an anchored fund which is helping GPs in the region launch a secondaries fund, and therefore, once you get 15 to 20% of your commitment from a state-backed fund, that then gives you the impetus to go and knock on the doors of family offices locally and also internationally, because I'm sure there's a lot of interest for capital moving into the region. So I think there's a lot of opportunity to structure and engineer some of those initiatives which can have a multiplicative effect for attracting capital to the region.
Great, thank you so much. Rajesh, what is still missing from the regional alternative investments ecosystem, and how do you see it evolve over the next 5 years?
Sure. So we invest across the US, China, India, Europe, and UK. So we look all the opportunities through the same lens. So a VC fund or PE fund should prove themselves. So when we look at, say, Middle East or GCC-based funds, we still feel there is a lack of, say, track record that, say, US or China or even Indian VC ecosystem has, because obviously that US ecosystem is more mature, so you have more number of fund who has, say, generated repeated success stories over last 15 years, 20 years. Here you have first generation of PE and maybe VC funds who have been in business for, say, last 4 or 5 years. They are still learning. I think there is a scope, especially to improve on the governance side. I mean, in terms of, say, professionalism and governance, there are pockets where improvements can be made. And then in terms of, say, opportunities, if I compare, say, US versus China versus India versus GCC, opportunity set are different. Capital is there, and it won't be difficult to give capital or raise capital here. It's like, I think at some times there are more capital than opportunities to invest here. But I think that problem over the time will get over, because government is putting a lot of effort to improve or innovate and create businesses across different parts of, say, economy, whether it's like travel, tourism, hospitality, AI, robotics, crypto, blockchain, name it, and they have a program to support that sector, bring more entrepreneurs in place, and improve the ecosystem. So I think in next 5 years, you will see more startups, entrepreneurs coming from UAE or GCC, and then we will have, say, obviously, a better opportunity set to invest in, and VC funds and PE funds will be like more open to invest in these opportunities. I think in terms of governance also there will be improvement, because we are seeing like we have a very mature professional sovereign wealth funds in the region, and they have been like last few days you may have seen announcement of Aldar partnering with Mubadala Capital, and they announced for the real estate investment. So similar Lunet is there. You have different part of say very mature GP coming out and creating a local GP who can invest in the region and outside region. So gradually I think that professionalism will pass on to ventures ecosystem as well, and things will become more mature.
If I could just add quickly to his point, you mentioned how the ecosystem over here is very young. I mean, honestly, this has the oldest LP ecosystem, but the youngest GP ecosystem, right? So, I mean, if you think about the US, the GP ecosystem is 50 years old. India, it's 20 to 25 years old. Here, it is, I would say, 1 or 2 cycles old, if that. And the other challenge that this ecosystem faces is that the opportunity set available to the local LPs is global. So, a fund in the US, a Blackstone is coming here, a Carlyle is coming here, all the UK funds are coming here. And they are also, then the local guys are also there. So, I mean, it's, you become a small fish in a very large pond in terms of the opportunity set that is available to the LP investing community over here. So I think some kind of a structured solution to promote local LPs and to promote local GPs and to encourage smaller fund sizes along, early stage, growth stage would be, would be something that would benefit the growth of that space.
Thank you. And Rajesh, you mentioned about, again, the nascent ecosystem for PEVC in the region. And there is a view that family offices who started deploying LP capital to PE and VCs back in 2018-19, they're awaiting return on their investments and to recycle capital. And hence, we've seen a slowdown in number one, LP investment that is impacting the final closes and also the launch of new funds. So does that also deter you from exploring this space for now, currently?
No, not at all. I think if you are investing in VC funds and expecting return of capital in 6 years, I think something is wrong from your expectation point of view. So VC, if right expectation would be to expect maybe 8 to 10 years, 12 years time frame for return of capital. So from the LP side, you will have different types of LP, depending who we are talking to. You have people who have just started VC investing. They don't have experience investing in VC. Their expectation mismatch might be there. There are LP who have been investing with top GPs since last 20, 30 years. They understand the VC ecosystem better, and they have very different expectations from the VC fund. We are more concerned about, say, right people, right strategy at the right time at right price. So I think even after 21 peak of the market, when market crashed, we didn't stop deploying even in US or China, forget GCC, because we thought like it's a time when you get better valuation. It's time when you can negotiate better terms with the fund. And it's time when you can take opportunistic bet in the market. And we don't think like 18-19 vintage a story will stop us from exploring those kind of opportunities. We think exit and liquidity is important, but if you are showing me return, if you are showing me transparency, as Nandi said, then we are open to wait for another 5 years. Show me the returns, show me the IRR, show me the multiples. But I mean, at least for us, the income or liquidity comes secondary to the return. There are LPs who are expecting a certain cash yield from the portfolio. For them, this distribution yield or cash yield is more important. For us as an LP, we are more of a growth investor. We are more equity-oriented, growth-oriented. We are ready to hold. We are ready to hold for long term, provided there is return, and return comes in a risk-managed manner.
Great, thank you. Neil, most family offices in the region deploy capital largely into North America and Europe. Is it because tech startup ecosystem in the GCC needs to mature further? And also, my second question, a follow-up, is that are family offices also becoming risk-averse amid global macro headwinds and US tariff-related disruptions?
Well, that's a very interesting question. Although I see a lot of hedge funds and VCs and family offices moving in from all other parts of the world into the UAE, or rather the Middle East. Most of the Middle Eastern family offices are still allocating into Northern America and Europe for a simple reason that I think there's a proper combination of risk management and institutional depth in that part of the world yet, while the GCC is still in an institutional building phase for venture and early stage innovation, to be honest. GCC talent, government support and entrepreneurship are not really, limiting factors, to be honest, but for family office, liquidity and certainty matters as much as innovation, quality matters as much. I also am on the advisory board of several companies globally, and we still debate on whether deploying in the Middle East makes sense vis-a-vis other parts of the world. Of course, India being highly emerging in terms of so many unicorns being springing up there, I deploy a lot into India. I've just signed a JV of my media company with Anand Mahendra. So as a family office, we're diversifying into media. We're buying sports teams. We're buying IPOs. And of course, we do a lot of due diligence before really plunging and deploying money into those segments.
Great, thank you. Nandi, from a CFO's lens, and also as an investor in India, what lessons can be drawn from India's PE/VC evolution for the GCC market today?
So you're saying, what is the learning from Indian market for us here? Patience. I think everything will fall in place. You have to crawl before you walk, and you have to walk before you run. I think it's just a matter of time. When Careem happened with Uber, it has created a flood of opportunities for employees at Careem. They became entrepreneurs that brought in wealth to individuals. It translated them from being employees to entrepreneurs. The VC money came in. When the VC money started coming in, government said, hey, listen, there's action here. Let's push the sovereigns to give some money to the folks who are setting up the funds here. That money came in. After that, they realized that the debt is required. That is being incubated through the fund route. And all that is a natural, they're evolving. So what is required is just patience. That is what we have to learn. India kept patience for maybe 20, 25 years. And we see the results today. We are just 10 to 12 years in that cycle, in maybe shorter in Middle East or GCC. It will take its time. I think the biggest learning from India, I'm not sure if Indian managers have completely learned this yet, but the top tier managers have. That's in terms of corporate governance. I've been quite critical of that particular aspect with some of the managers in India. But I don't want to paint everybody with the same brush. But those who have evolved and brought in the top tier governance, I think people here should imbibe that. That is so critical, because remember, in the world of family offices, I'm not the top tier talent which is available in this country, but I'm a top tier trusted advisor of my principal. They know that my every penny is safe with Nandi Mehta. That precisely the comfort I need with the manager, and that goes across the world. Every family office gives more importance to trust, integrity than your ability to make money for me. I think we have that here. But out of India's experience, we need to bring, we have to really bring that even further in every market. And those who have brought in, they've seen great support from LPs and great respect out of the portfolio. So there's nothing complex, Dilasha. It's very simple. It's just that, everybody's making this whole investing piece super complex and super difficult to say, hey, listen, we're doing something very special. It's very simple.
Right, thank you. Utkarsh, would you like to talk about how local capital allocators can collaborate with more with Indian GPs? Maybe you can talk about that.
Sure. I think, I'll piggyback on Nandi's point. You can't come to the UAE the day you want to raise capital. Building a long-term relationship over here is very critical. I think that should be critical in every market, but there are certain markets where, they move a lot quicker in terms of taking decisions, and they're willing to take bets where they are willing to be wrong. Here and Japan, and South Korea, I would say, these are three markets where the value of relationships, the value of a trusted, introduction, and the fact that you've engaged with someone for a long time are critical factors in being able to win that trust and demonstrate the fact that you will have the ability to be good shepherds for their capital. And only those people who are willing to invest their time and not come with a very transactional mindset will be able to be successful in raising capital over here. I think one of the challenges for most of the capital allocators over here when it comes to engaging with India is that the check sizes might be very small in many cases. The funds the bulge of the Indian bell curve of funds is funds which are in the $50 to $150 million range. And it just becomes difficult for many capital allocators to make meaningful allocations in that space or even smaller ones. So that is one challenge. I think, setting up structures that allows you to engage with that would be very meaningful, because I think there's some real good gold which is waiting to be discovered over there. And I think also opening up your eyes to newer asset classes, whether it's secondaries funds, whether it is, some of the, the deep tech opportunities which are coming up these days. Those are things which are meaningful to engage with for our capital allocators over here. But I think the key line is what Nandi said, and I'll echo. It's about trust and relationship, and it's worth it to spend the time to build those relationships, not when you need capital, but before you need capital. And to make sure that you have a long history of credibly engaging with your LPs, making sure that you have a long history of, whether you make mistakes, whether you give returns or not, but there's a strong culture of transparency that you have. I think most investors do not dislike bad news, they dislike no news, they dislike surprises. So as long as a person who's investing into you has line of sight into what you're going to do and what you're going to deliver, whether that's good or bad, obviously everybody wants alpha, everybody wants returns, but a problem which can be solved together is much better than a problem which you have no sight of.
Great, thank you so much. Unfortunately, we don't have time for questions from the audience, but thank you so much to all the panelists for a very enriching discussion. Thank you.
Thank you. Thank you so much to all of our speakers. Absolutely enriching, I must put it that way. And I'd like to request you all to please step forward for a quick group photograph. It was like opening up a Pandora's box of perspectives back to back from each speaker right over here. So thank you so much again. And thank you, audience. I mean, that was some patient listening as well, because now it's time for our final session. And this is where we are finally focusing on the high impact investment opportunities. Yeah, we decided to actually save the best for the last as well. That being said, all the previous sessions have been nothing short of spectacular. But this is where we're looking at sectoral insights and growth horizons, especially when you're looking at these investment opportunities. This will be our finale session, and after that we will then be doing the networking break. So if you've taken a good look at the agenda, we tried moving the things a bit, shake the things a little bit up so that we could accommodate to everyone's insights, everyone's keen full ears, get to do the sessions, and then we can celebrate our conversations over a cup of chai or coffee. But that being said, let me also set the tone and the context for what our next session is about. because the GCC, especially the UAE, has become a playground of possibilities for alternative investors. In fact, when we're looking at real estate platforms, to renewables, to tech, to healthcare, financial services, to tourism, and a rapidly expanding affluent consumer base, this region has outgrown its old construction-first identity. So today's question is really simple. How are the investors navigating this new sector buffet? And most importantly, where are they placing their bets to ride the next wave of opportunity? Now, Malvika again will be back for the finale session. In fact, this is one question that even I have on my mind, and I'm very keen to find out the answers from our speakers. Quick heads up to our previous set of speakers, if we can take the discussions offline, or let's have you all sit down so that we can complete the finale session as well. All our previous set of speakers, if I can request you all to please take your seats. I'll quickly bring my speakers on board and let's get the session started. We have with us Rami Harajli, Chief Investment Officer, International Venture Investments Holding. I'd like to also please invite Faisal Ali, Group CIO, Gargash Group. I'd like to further invite Ayas Algul, Group VP Finance, Yas Holding Technology, and Mona Sari, Head of GCCPE, Bluefy Capital. Malvika to spearhead the session. All right, speakers from the previous session and my delegates, fellow delegates, can we please take the discussions offline or maybe inside the hall? But while I come by there, Malvika, let's get the session started.
Good afternoon, everyone. All right, we'll begin. So if we look at GCC's economic story over the last 4 decades, there has been a profound evolution. For a long time, the region's growth was anchored around a few sectors, primarily construction, infrastructure, and oil-funded government spending. However, this has been changing dramatically in the last few years. GCC now presents one of the most diverse investment landscape anywhere in the world. For alternative investors particularly, this shift is transformative. The question is no longer whether there are opportunities, but how to think about them, how to calibrate risk, and how to allocate capital. That's exactly what we are here to unpack. But before we dive into the questions, let's set the stage with a quick 30-second introduction from all our panelists. Just who you are, who you represent, and what your firm's interests are.
Sure. Hello, everyone. My name is Rami Harajli. I'm the Chief Investment Officer of IVI Holding. We are a single-family office based in Dubai with investments in the region and in Central Asia and Africa. Our core business is mostly alternative investments, direct investments in infrastructure projects, oil and gas, healthcare, logistics, hospitality, and other sectors as well.
Thank you. Hello, everyone. My name is Ayas. I'm the CFO of Yas Holding Technologies. We are specialized as a system integrators and software development. We have 6 operating companies here in the region in UAE, Saudi Arabia, and Egypt. One of them is Itqan Khalij, very well known, Digital Okta, Advanced Technologies Consultancy, Second Step Software Development, IT Works, and Ibtikar. We have our own IP systems in education, Ministry of Education ecosystems, like school information systems, school management systems, and learning management systems that covers all the region, including Learning Curve, which is a corporate skills development. We have also partners. We are partners with more than 40 technology vendors across the world.
Hi, everyone. My name is Mona Sareh. I'm heading the private equity business in the Gulf for Bluefy Capital. For the benefits of the group, Bluefy Capital is a newly established asset management firm set up by the ex-CEO of Investcorp, Hazem bin Qasim, with the idea of positioning the firm as a bridge between the GCC and the Global South. Today, we're roughly $6 billion AUM, split across the GCC and Asia. Our investment mandate is pretty much sector agnostic, mostly focused on private equity / leverage buyout industry. Thank you.
Sure. Thank you so much for that. I'll direct my first question to Rami. You have a portfolio spanning across industries from oil and gas, real estate, healthcare, and beyond, but with so many options on the platter right now, how do you prioritize your investments across these sectors? Basically, what filters do you look for to decide where your next dollar should go?
Thank you, Malika. So in today's world, you know, you've got several opportunities. There are lots of opportunities one could look into, but we really do not focus as much on the opportunities, rather on the portfolio that eventually provides diversification, resilience, and an acceptable equity return. You know, when we look at opportunities in several regions, at the end of the day, the portfolio should eventually provide us or reveal the kind of risks we are involved in such projects. And financing is a big contributor to our decision making. In today's world, financial engineering is quite a challenge, especially in emerging markets and developing markets and so forth. Our core business is power generation. We eventually try to look into long-term projects through PPAs. We eventually build a constructive relationship with banks, with lenders. And at the same time, we always try to diversify as acting as a VC, investing in startups, and so forth.
Got it. My next question to Ayaz. Enterprise technology, AI, software development, there have been key focus areas for years. But could you expand on your thinking behind the technology investments and how they fit into your overall mandate and investment strategy?
Well, actually, the plan in the next 3 years is to focus on the digital transformation at inflection point. It's very important to us to expand our portfolio, to have a comprehensive offering, expand to cloud services, which is the critical incubator today is the cloud services, the enterprise digital transformation, the AI also offering, from small models to big, large AI models. This is very a national interest and a national competitiveness also. It's the agenda of the government. We have, by the way, we have more than 270 active government accounts with our group. One of our companies exists in the technology field since 1980s here in UAE. So our team, the company graduated so many resources and so many expertise over the time and decades, everyone knows. And actually, this is the turning point that we are focusing in the next stage for us. Of course, when it comes to AI, which is the recent demand, there are a lot of challenges. But for us, for example, we embedded the AI offering inside our solutions in education technology companies, the 3 education. So, but it's still the model, which is honestly depends, and as an interface, depends on ChatGPT eventually. To move on, people don't know that AI exists since 1990s, but it was very simple structure: input layer, hidden layer, output layer. To expand into thousands of layers of hidden layers inside in a neural network, you have the challenge at 1990s was the hardware. Today, you have very advanced hardware. You have GPUs, TPUs, and Google, NVIDIA provides 2,000, 3,000 processors. That means the most complex AI matrix can be multiplied with 1,000 lines, 1,000 rows in 1 second, instantaneously. So the hardware is not challenged today. You have data centers built by the government. The data centers of Khazna built, like until now it's 500 with collaboration with G42 and other global vendors. They have around 500 megawatt. Is going to grow to 5 gigawatt in the future through the Stargate project. But the point, the hardware is there. The solution is there. You have also quantum computers coming, which is the palm of the hand. It can do a computation that hypercomputers can do for 1,000 years or million years in 1 second. So the hardware is not a challenge. Today, the challenge is the data. How to feed that AI, how to train it. Especially the generative AI needs a lot, it's hungry for the data. And to provide that data, that the business is significant.
ChatGPT is growing very fast. Anthropia is growing very fast. They are collecting information shortcut from the people directly to build that AI models, to give us an AI models that we can implement. But for a national agenda, it's very important to have our local AI models instead of importing them from outside. By the time we have to import them. But going to the concerned problems like in medical, in space, in the climate, those should be localized. And collecting the data is the biggest challenge today. So that's why the government, there's a symbiotic relationship between the government and private sector to help, because it needs an extensive source of power. It needs an extensive investment to pave the way for the data management, to pave the way also for us as investors and private sector to start building up our AI, our own AI models to advance in that term. That's the national agenda. And that's very important. The other side also, the let's say, investment in technology are very important. The IoT, for example, for sustainable cities, smart cities also, is very important to expand. Maybe in the next 5 years, agenda will be growing in that matter also.
Got it. We don't have an AI counter like most conferences today, but I'm glad it is not at zero.
Yes, it's nice because it's all connected. People should understand our notion in investment. And I always advise everyone in investment and technology. Please understand the product before you invest. This is important.
Got it.
Understand the go-to-market strategy behind it and how much time it will take. This is very important. People investing in technology, they don't understand the product. I don't advise that. Especially, we don't like to the rumors that is going, the market is missing out on that term or something. No, it's real. Internet is real. EV cars and electric and sustainable energy is real. All of them are real. But this is what we do. For us to evaluate any investment, for me especially, we assess the investment not through the multiplier of EBITDA, not through the present value of cash flows. No, but how much it complete our investment portfolio. How much we can leverage on that business and scale it up in the future through our investment. This is very important. That's the perspective we look at when we decide about the investment.
Got it. Thank you. Muna, I'll come to you. Blue 5 doesn't carry the weight of legacy like a lot of players in GCC do. You are a relatively new PE fund. Could you, with like your fresh approach, could you talk about what are the subsectors within the GCC that are looking particularly exciting for you?
Absolutely, Malvika. So again, as you mentioned very well, so Blue 5, so our approach to private equity is very much sector agnostic. However, when we assess opportunities, there are three main factors that we look at into deciding whether we go ahead, yes or no, with an investment. The first one is the ability of the company to scale and become an international champion. Two, the ability to drive value creation. We have our own playbook, tremendous experience in private equity, so we need to see whether we can drive value creation in those assets that we invest in. And three, obviously, as a private equity investor, our main objective is to be able to return money to our LPs, so our ability to exit those opportunities after our 5 years of holding investments. Now, looking at the deal flow that has been coming into our way the last few months, I would say there are three main sectors that I think has been poising a lot of growth in the region. And I think, as you mentioned it very well, the GCC today is probably at an inflection point whereby we have very ambitious national agendas. But private capital is becoming a very, very important actor into driving, I think, the implementation and the growth of those national agendas. So coming back to these three sectors, I think the first one is digital infrastructure and automation, where I think demand outweigh very massively the supply. So again, when we try to assess opportunities in that investment, we're trying to see which new winner is going to be effectively becoming or potential for the next champion in the region. Second sector is education, whereby I think it's driven by tremendous growth of the population here in the GCC, and also the ambitious, I think, national agendas that are poised towards that sector. The third one, I would say, is logistics and infrastructure in general, whereby I think the GCC is positioning itself as a global, the next probably global trade hub in the region.
Got it. I'll direct my next question to you, Rami. There's been a shift in sort of the allocations through the years. You talked about the evolution of where you invest, but considering the allocation and the risk associated with it, where do you think you are headed in the future? If you were to look at a future roadmap, how are your current investments and the risk diversification that you are trying to do? What does it tell you about where you are headed?
So again, when we assess opportunities, we look at three main things. First, we look at the clarity of the opportunity. Okay, this means what kind of returns we should expect from that opportunity. Second thing, we look at the structure, especially when we invest in foreign and international markets. We always look to work with credible partners, and this is a given. We go with either co-investments or we invest with credible funds that would go ahead and they have very well market knowledge of the sector that they are leading in. So we definitely would go ahead with co-investment. And the third thing is definitely the risks involved. When I talk about risks, if I want to talk about the portfolio we manage, most of our investments are in a very highly geopolitical risky area in the region. Okay, and at the end of the day, yes, it is very risky, but at the end of the day, the returns, high risk, high return. That's what is said, and the reality is that high risk, high return, or high risk, high loss. It's one of both. So anyway, we always look at two things when we penetrate foreign market or we are in a position to build a portfolio. First, disruptor ideas. Things that those markets are not used to. So what we do is we partner with international companies and bring in the technology to that country. We work with governments. Governments are our main clients for many projects, especially related to the energy transition process. We also work with international companies in oil and gas, providing technology that eventually will cut cost on the upstream. And therefore, so we look at such opportunities, but we engage in the details of the operation and investments. So we are not interested really to just invest in any fund, and we have no access to the data of projects that are invested. And most of the time, what we do is we create or we engage in the projects, we create the management, and we provide this company that is managing this project its own autonomy eventually, and then we go ahead and we move forward.
Got it. In the interest of time, I'll direct one question to each of you. Looking ahead 5 to 10 years, what are the sectors, subsectors, or business models that you think will see a lot of capital inflow in the GCC? And you can take turns to answer this. We'll start with you, Mona, and then.
From my perspective, the main sector that is already driving a lot of capital inflow and is going to be poised towards driving more capital inflow in the future is definitely going to be digitalization and automation. I think today the GCC has been building a lot, but in the next 5 years it needs to be able to optimize and drive efficiency. And the only way to do that is effectively implementing technology and digitalization to every type of companies, effectively. The only thing that I would say is that the capital inflow that needs to go into that sector needs to probably be a bit more rationalized and poised towards probably the winners rather than a more diversified allocation.
Yes.
To me, I would rather look at how the vision of the government is that where we have the incentives.
If you look at the data science and data management, if you look at the supply chain technologies also, it's very promising because the e-commerce and the digital business is growing significantly. And it's still in a primarily tools, still until now is running in a primarily tools. I think AI is going to be, again, with the collaboration with the supply chain technology is a big opportunity. Coming to renewable energy, you see the direction of the government, and the biggest solar extensive or concentrated solar parks in the world is Mohammed bin Rashid Solar Park here, which generates 5 megawatts. Noor Abu Dhabi, it generates, its different locations generates 1.1 gigawatt, but the notion or the vision of the government today is to decarbonize the climate or the environment by establishing and pave the way also for investments in renewable energy or green energy. In Masdar, IRENA headquarter in Masdar, people don't know this is global body of renewable energy is headquarter is in Masdar. And the focus today will be, and the incentive will be given to the green hydrogen. And there are now already some green hydrogen corridors built between UAE and Germany and Netherlands and Japan. So there's a plan to expand in that direction. I see huge opportunities in renewable energies. This is in general, in green hydrogen, in wind fields, and in solar systems. Maybe nuclear, and the guests before in the previous sessions, they talked about the nuclear, but it still needs a huge investment. It still needs more government symbiosis in order to help those private sectors to grow in that term. So this is where I see the opportunities in the future. Besides the AI, also the big models of AI that helps all of them together. Optimization of the energy, optimization also of the consumption of the energy, and other sectors. Okay.
Got it. Rami, please go ahead.
I know we're out of time, so just quickly, I would say that the common cost factor with all industries is the cost of energy. And this is our main specialty when we come and we address what kind of solutions we can provide to really cut down on the cost of energy right now. So power generation solutions is definitely something to look at in the near future, new technology coming in and all that. And second thing, no doubt, I would say investments in data centers is definitely the future.
Got it. I think while we have run out of time, can we at least take one question if we have any? Okay, all right. I think then we'll end the panel with this. Thank you so much for your insights. This was a lovely discussion.
Thank you.
Thank you, Malika. Thank you to all of our speakers. And if I could request you to please come together, we'll have a photo op as well. We'll just have you all come together. But thank you so much indeed. Another befitting discussion. And with that, we come to the end of the summit. Well, that was our finale session, by the way, ladies and gentlemen. But on that note, before I call it a wrap, meanwhile, let me also take the opportunity once again to thank our presenting partner, Dubai Economy and Tourism, session partners, Interpolitan, Nisus Finance, Bexley Advisors and HDFC Capital, knowledge partner, Omnivore, and experiential partner, Champion Infratech. But that being said, I want to thank you, our members of the audience, for being extremely patient and participative and staying back with us till the end of the summit. We'll of course now open it up for the high tea so that you can take forward your conversations and any further discussions with our speakers over high tea. This is Kavya signing off, and I wish you all a fabulous evening ahead, and thank you for joining us and for being part of our second edition of the LP Summit here in Dubai. Thank you once again.